Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Monday, December 1st, the last month of the year. And I'm not late, even though everyone's spamming. I literally started 5 seconds before 8:45 just so I could be on time. But we're here. I have had the longest break I've had from streaming, I think, in like a year, to be honest. I have not streamed for the past 4 days, and it's kind of crazy because the last stream I had was on Wednesday. No Thursday stream, no Friday stream, no Saturday stream, and no Sunday stream, and now we're back. So I'm happy to be back. I hope everyone had a great Thanksgiving. Quite frankly, I enjoyed the time off because like this is the first time in I think about a year where I've explicitly just spent time with the family for like 4 days in a row. So I really hope people got to spend some time with the family. Obviously, missed everyone here, missed doing this as well. But I think sometimes you kind of just need to step back from it, especially given how emotional November was, up and down on everyone's psyche, portfolios, obviously. So I think it was good to take a little bit of break, and I hope people got at least some level of time away from the markets, got to focus on football and eating good food and talking with the family. Martin says, and now you hate your family. Well, that's usually what happens after you spend 4 days with your family. But no, I had a good time. Went to New York, traveled a bit. I guess if you want to say traveling to New York is a form of traveling, although New York was, dude, let me tell you, the consumer is not weak in New York. Not in New York, bro. The consumer is, I've never seen these many people at Bryant Park. And I've been to New York for Christmas many times, but it was pretty crowded. So no, we went to New York, just ate some good food, spent time with the family, really just enjoyed sitting down and like not having anything to do. But given the nature of, I guess, my personality and so many of others' personalities when it comes to just analyzing financial markets and wanting to get on top of things, it's good to be back. It's good to be back because it's obviously very exciting to once again analyze what's going on in the global financial markets and end out the year. This is the last month where we're finally going to be solidifying these year-to-date returns. And the question becomes, over the next 31 days, how do these returns end up solidifying? How do these returns end up turning out? S&P 500 right here, down in the pre-markets. Unfortunately, we're starting off with a bit of a red day. There's some reasons for why we're red. It started last night with the futures. We'll talk about why it's happening. S&P right there down about 0.69%. A lot of it has to do with Bitcoin, but Bitcoin is not the real story. I think a lot of it has to do with Japan. So we'll talk about that. I have not focused on the markets over the past 3 days until last night when the futures opened. And I was like, all right, let's see what the hell's been happening over the past couple of days. And quite frankly, not much has happened except for Bitcoin tanking from 91 to 1.84 this morning. And as a risk on indicator, that kind of took everything risk off as Bitcoin took a little bit of a dump right here. So we'll talk about what's going on. We'll talk about Black Friday shopping sales again. The consumer, we saw in those retailer ETFs or retailer companies last week. The XRT, which is one of the largest retailer ETFs, had its best 48-hour stretch, 2-day stretch since May. Black Friday, Cyber Monday sales, at least Black Friday and Thanksgiving sales are in, and it's pretty damn good. I imagine Cyber Monday is going to be pretty good as well based on the analytics we have in terms of the projections. If that's the case, maybe that is a bit of a tailwind for the market as earnings continue to get better, as the consumer maybe isn't as weak for this holiday season. But you've got Nvidia down 1%, Palantir down 1%, Hoodie down 3%, Amazon down 1%, Broadcom down 1.5%, Tesla, which Michael Burry yesterday in his Substack said is one of the most ridiculously overvalued companies. So you got Burry, who has been taking shots at Palantir and Tesla, Nvidia. Now he's taking shots at Tesla. And so we'll discuss kind of everything that's going on in the broader equity markets. Again, S&P 500 right there down about 0.64% on the day. Bitcoin 85,800, falling from 91,000. Thank you, everybody, for being here. We got a lot to get into. Again, very, very grateful for all of you. Hopefully you had a great Thanksgiving, got to spend some time with your family. I think it was a much needed little bit of a break after what happened in November, but now we got to get back at it, and it's time to get into it. So let's get started with what we've got going on. I think we should start off with Japan. To give a little bit more analysis on what's happening. Admit there's some turkey in your beard. Dude, Thanksgiving food was legit. I don't need turkey, but we had mac and cheese, we had ribs, we had a ton of desserts, bro. Like desserts will kill you from Thanksgiving. It's just like that. That's what makes you just want to go to sleep as soon as you eat those desserts. But no, it was a pretty pretty decent Thanksgiving here. Okay, so Japan, let's get into it. What happened with Japan? Last night, Japan's 10-year bond yield shot up, and it shot up aggressively. And I think that's what kind of caused Bitcoin to immediately take a ugly dip. So this is the overall bond yields in Japan. You know, ironically, I was listening to a story, or not a story. It was a YouTube video that was talking about Japan's collapse in the 1990s, kind of that lost decade for Japan. And this was like a couple hours before the futures open. And then these are all the bond yields. Bond yields going up is not a good thing because that means people are selling bonds, which means the yields are going higher. So the market's basically saying, hey, we don't trust the rate of inflation. We don't trust the fiscal or monetary policy that the government is deploying. And as a result, you get a lot of wacky things that could happen. Now, why was this so bad? Well, if you take a look at this chart right here, 1.838% on the Japanese 10-year bond yield. That is the highest yield for a Japanese 10-year bond since 2008. And that's what I also think is scaring a lot of people here because, and the reason this is happening, by the way, is because Japan has been simultaneously raising rates while they've also been printing money, which doesn't make a lot of sense because you can't. And this is kind of the video that I was watching, and I'm trying to do more research on like the history of Japan, so I'll talk more about it over the coming days. But it's like Japan has had some of the weirdest economic experiments in human history. And it's just stuff that makes you scratch your head. Like, why did they do this in 1990? Why did they do this in 2000? At one point, non-performing loans, NPLs, so loans that are basically defunct loans, like they're insolvent, you've got to write them off, and you got to realize that you're just never going to get the money paid because your credit underwriting was probably bad. At one point, non-performing loans were 10% of Japan's GDP. This is back in 2000. Why? Because the Japanese government encouraged Japanese banks to prop up these failing companies that had been given loans that they were never going to pay back. And they only intervened when shit really hit the fan going into the end of 2008. So, I mean, it's quite incredible what has happened in Japan. And now what they're doing, the 10-year, by the way, spiking as well, doesn't make a lot of sense either with all the stimulus printing, which, I mean, like you could argue that that is important for their GDP growth, but also raising rates at the same time is a bit confusing. So you've got a lot of weird and wonky stuff happening in Japan, which I think is what triggered the Bitcoin sell-off. Now, what's the syllogism about the Bitcoin sell-off? If Japan yields rise, the yen appreciates against the dollar. When the yen appreciates against the dollar, people have to sell their yen, or sell their tech stocks or whatever other asset they're in. Most of the types of assets that immediately get sold off are crypto assets because those are the most liquid at that moment because they trade 24 hours. That ends up being Bitcoin to cover the short on their yen because, again, there's a very convenient yen carry trade that I think people know about by now, which is shorting the yen, borrowing in yen, and then going long tech or going long crypto or going long something risky. When the chickens come home to roost for a trade like that, it ends up leading to a bloodbath in the US markets, at least from a risk on perspective. And so I think that is what happened over the past 24 hours. You've also got a lot of reports of just deleveraging. So there's $800 million of deleveraging that has happened in the Bitcoin markets now, or in the crypto markets. No one knows exactly why there's been so much of a deleveraging effect. Again, one could argue it is the yen carry trade, but maybe it's something else. Maybe it's not just yen carry trade. Maybe there's a different macro thesis going on for why. I mean, if you take a look at it, XRP, Solana's at 127, Bitcoin 86,000, Ethereum, unfortunately, is not able to maintain any momentum above 3,000. 800 million as of this morning in liquidations. You would think after all the leverage that happened on October 10th, which led to that $20 billion liquidation, and then again in November, that there wouldn't be as much leverage in the system. It looks like there is, and it looks like people continue to leverage up. So unfortunately, this might be another issue with what's going on in crypto, which is that there's just a lot more leverage that is not wiped out of the system yet. And I know that's and people don't want to hear that because, you know, they've heard for the past month and a half that there's leverage, there's too much margin, but quite frankly, there might just be way too much freaking margin in the system. And this brings up the question of Saylor. Now, Saylor, I don't know exactly what he announced today. It still doesn't fully make sense to me, but he announced a 1.44 billion USD reserve, which I guess that's just a reserve filled with $1 billion. And then they bought a little bit more Bitcoin. I didn't get time to fully analyze what exactly happened today, but they bought another 130 Bitcoin, 89,960. They now have 650,000 Bitcoin. By the way, they updated in their 8K their projections for Bitcoin. They don't think it's going to 150,000 anymore by the end of the year. They're now assuming 85,000. So a lot of their projections came down. But Saylor continues to buy, and you got a lot of people asking a question. Wait a second, could MicroStrategy become one of the most distressed assets on the planet in terms of debt, just given the amount of obligations they have? They have about, if I'm not wrong, $730 million per year in interest that they have to pay on all their preferreds and all the other types of equities they put out. And a lot of that works when Bitcoin's going up. When Bitcoin is not going up, that becomes an issue. Now, granted, if you listen to Saylor, his perspective is they have tons and tons of money, or not tons of money, they have tons of leverage to be able to pay off their debt. And a lot of the clauses, if you actually read through the preferred equities they put out, allow them to issue more stock to be able to pay off the creditors instead of giving them cash. And selling their Bitcoin is kind of the last resort in a lot of their filings. That it is a possibility, but given Saylor's commitment to Bitcoin, it feels rather unlikely. So you got a lot of different narratives boiling up, but I think that yen carry trade is kind of the core reason why Bitcoin's getting hit. And as a result, that took down Nvidia, down 1.2%. We'll talk about Nvidia. You got a lot of different things over the weekend about Nvidia, a lot of new reports about what's going on with Nvidia from a competitive perspective. So we'll talk about that. But obviously Google, Nvidia, Broadcom, Palantir, Hood, Tesla, all of them getting hit as Bitcoin takes a bit of a dip from 91,000 to 85,000 here on the day. VIX is up as well, up about, I think, 7% in the pre-markets? Yeah, around about 7%. Okay, Tom Lee was just on. Let's take a look at what he had to say this morning as well, and then we will get into Nvidia.
In the next couple of weeks is around central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. And as you know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy. So I think people got cautious, but now have to performance chase. And then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
Yep. So it's still all about the Fed, because I was thinking that there is a time when a market can hit an inflection point where the reason the Fed is cutting becomes a problem for the market. That's what I thought. With the jobs and everything else,
I mean, I'd say that the shutdown put a blackout on data, and I think that created a bit of anxiety because markets like visibility. But to me, the fact that claims have been behaving and the September jobs report kind of showed a bit of a recovery. I think the labor market's probably holding fine, but the Fed doesn't want that to worsen. But I think the inflation story is actually weakened a lot. So to me, the Fed would be cutting for the right reasons, which is as they look at the next 12 months, the tariff inflation impacts are fading, but there's risk on the job market. So I mean, I think it's cutting for the right reason, which is, real rates are tightening if they don't cut.
Here's what concerned me about a couple of weeks ago, Tom, with the market's behavior, and that was watching all of the AI high flyers dip and drop, and pretty precipitously in some cases, because it looked like the Fed wasn't going to cut. That raised questions about what was happening in the private markets, and it made me start to wonder, okay, are we looking at a lot of business models that don't work if the Fed doesn't continue to cut rates? Are these the business models that are driving and powering the market right now? That's the one thing that made me sit up and say, that's a little different.
Yeah, I think there was a bit of soul searching, Becky, in November, because we know leverage rose, and we know there was deleveraging in some markets like crypto, and we know margin debt's high. And I think that there was essentially a reset in November because the market had a 6% decline, but the AI stocks and the meme names and a lot of other names fell even more. So I think that position reset has been healthy, and I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off. And now if December is strong, there's going to be a bit of performance chasing. And I think that's what you should typically expect in the final weeks of the year.
I thought it was when we saw Bitcoin sell off and sort of the high flyers sell off on the notion that Powell got hawkish at that one, whatever it was, that one meeting. And then Williams totally turned that around, and the Fed futures jumped, and it became clear they're definitely cutting again, and we got very little for that. Bitcoin should be back at 100 if it really is totally dependent on Fed easing, and if it's a debasement trade, which people say it is. We didn't get much for now. Everybody, you're sure that they're going to cut now. There was a time where we thought they weren't going to cut. What do we get for going back to cutting mode?
Yeah, I mean, Bitcoin and crypto have been disappointing because they really took it in the gut in mid-October, and then kind of got hit again when, you're right, when the odds of a Fed cut dropped, Bitcoin fell. And then now that the odds have recovered of a cut, they haven't quite recovered. I mean, I think that that's still the lingering effects of that deleveraging that happened on October 10th. It's not that different than the wipeout that happened in 2022 with FTX. That took 8 weeks. So we're kind of emerging from that. That's 7 weeks in the rearview mirror. So maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
Yeah, wipeout's a bad word. If you could pick another one.
Apparently, Jensen is going to be on CNBC at 9:30, just getting the headline right there. So probably it'll be 5 minutes after. So when the market opens, we'll see what Jensen has to say. We do have some updates on Nvidia. And likely the deal that Nvidia announced today is why Jensen will be live on today's show. But you got Tom basically making the argument right here that we're going risk off on crypto, the same sort of deleveraging argument he made a couple weeks ago. And unless that changes, then it does seem like crypto is probably going to be stalled out for a bit.
I think 5% or maybe even 10% is possible in December. So I think a 7,200, 7,300 is likely for S&P.
Ask you not to do that. You're giving me a target and a time. Don't. It's not good for your career. Don't do that. You're going to be wrong one of these times, but you don't care, do you? You've been right enough.
Well, I'm just looking at probabilities, but you're right. We've been wrong plenty of times, Joe. So I'm okay being wrong too.
Okay. I never have been, really. I don't think so. That would be a.
All right. So Tom's still calling for 7,200 on the S&P 500. Obviously, it does, or at least have 7,000, right? It's 2.5% away. It's not that crazy. We ended at 683 on Wednesday. I know there was low volume, so now we're going to have full volume come into the markets as we approach the first trading week of December. But it's not crazy to think we have a 2.5% month. Now, there are some hurdles to get there. One of the biggest hurdles over the past couple of weeks was clarity around if we're going to get rate cuts. I mean, probabilities are the highest they've been even since all of last week when we got the nod from Fed President Daly and Fed President Williams that we're going to be likely to cut. I mean, 87.6% on the Fed futures probability. So if we're going to continue to get the market expectation that a rate cut is happening, I don't see that as bearish. Does that mean we're going to pump? Not necessarily, but it does mean there is a chance we don't easily dump or the bottom doesn't fall out like it was happening in November. And November ended barely down. We peaked at 689. We ended Wednesday at 683. I know right now we're down about 0.5%, but as crazy as Wednesday was, it was not one of those months where we actually ended, 4 or 5% down. In fact, it was the largest reversal in November's history since 1950 on the S&P 500. We lost 4.5%, and then we recovered 75% of that by regaining 3.5%. So quite incredible how we ended out in November. The question is just, will that play out for December? Now, one of the reasons some people are skeptical for December is because of Nvidia. So let's get into that topic. Nvidia right here, 174.99, down about 1.15%. It was down 1.8% on Wednesday. So actually on Wednesday when the S&P closed, not at all-time highs, but close to all-time highs, Nvidia, unfortunately, was not able to close higher. It was one of the only stocks that was red on Wednesday, which I thought was pretty peculiar. Like, why is Nvidia red when the entire market is pumping? I think it's healthy because Nvidia going red, but the market pumping means that there's other things that are propping up the S&P 500, which is good. You had Google, Apple, a bunch of different names, healthcare, that's starting to play a role. But what's happening with Nvidia? Well, SemiAnalysis, which is a consulting firm for semiconductors. A lot of people probably know Dylan Patel. He is a thought leader, and he's the founder of that boutique consulting firm. They put out a report, and that report, I have not fully read the report. It's like 10,000 words. I did not do that over the weekend. I am planning to try to get deeper into analyzing what they're saying, but this graphic is what he posted, which summarizes the entire report. And as you can see right here from the graphic, it's basically Google TPUs are coming for NVIDIA's lunch. Now, he is not saying NVIDIA is dead. He's not saying NVIDIA is not going to survive. He's actually incredibly bullish on it. I think people are painting his perspectives as a semiconductor analyst in the wrong light. I mean, he's by no means bearish on NVIDIA. And if you've listened to any of his podcasts over the past like 6 months, he's very, very bullish on their trajectory. Everyone knows NVIDIA is the leader here. But his argument is there might be a little bit of margin compression, and there might be a little bit of market share that is being taken away. And one of the reasons he points to that is because of the early adoption that he's seeing in these LLM companies with Google's TPU fleet. So for example, he said OpenAI hasn't even deployed TPUs yet, and they've already saved 30% on their entire lab-wide NVIDIA fleet. This demonstrates how the perf per TCO advantage of TPUs is so strong that you already get the gains from adopting TPUs before they even turn on. A TPU, tensor processing unit from Google, once again, is another form of ASIC. And there are a lot of debates online going on around the energy efficiency of these TPUs and the ability for them to be at least somewhat on par with Blackwell, if not, quite frankly, just as good in a specific use case, maybe not a general purpose use case, which is where, Jensen's kind of retort to the ASIC argument comes in. And as a result, it's a massive opportunity for Google. You've already had a bunch of investment firms like Morgan Stanley, JP Morgan, Goldman Sachs. They came out over the weekend. They said, hey, we don't think NVIDIA is going anywhere. But if Google were to take even 3 to 4% of this market, we're talking about massive upside to their earnings and revenue potential over the coming years, which is why I think Google is holding this $300 level that it's staying at right now. So look, I'm trying to do more research on the TPUs. I'm trying to understand them at a fundamental level, but at its core, I do not think NVIDIA is dead. I think NVIDIA is very attractive. I bought more NVIDIA at 170. If we go back below 170, I will be buying more. I think in a year, we will be laughing at the idea that NVIDIA was supposed to die because of Michael Burry's Substack or because of Google TPUs. At the end of the day, if you believe demand is insatiable for AI and compute, you have to be bullish NVIDIA. It's just that simple. Because if demand is not insatiable, even if Google starts selling some TPUs, yeah, they'll make some money, but the sustainability of the earnings of that business line of them like consistently selling TPUs is not going to exist. Same thing for AMD. Obviously, all the CoreWeaves, Nebius, Iren, those go out the window. Like, you either believe the demand is there or you don't. And if you believe the demand is there, then the company with the supply chain, with the infrastructure, with the ecosystem, with the ability to actually negotiate the deals that allow them to have the margins that they have is NVIDIA. I'm not saying that monopoly or that pseudo monopoly is going to exist forever, but I am saying given the level of compute constraints we've seen and energy constraints we've seen over the past year, and based on just Jensen's guidance from Q3 going into Q4, and now NVIDIA is trading at a 20 times EBITDA value with a 25 times EPS for 2026. It just seems like a no-brainer, in my opinion. And you either believe that or you don't. But I don't think NVIDIA necessarily is now the linchpin of the market, because the fact that the market's kind of holding close to all-time highs and NVIDIA is down 10% from earnings is relatively bullish for the broadening argument. But I also don't think NVIDIA is going anywhere. And I think over the coming months, maybe it's going to take a while for us to crack 200 again, but eventually money will find its way into companies that are compounding earnings, and NVIDIA for the foreseeable future is not going to stop compounding earnings. Now, if there's one quarter where we get a sniff that NVIDIA's earnings growth is starting to fall off a cliff and the analyst projections for 2027, 2028 are dead wrong, NVIDIA is going to crash. But if that's not happening, and you got a lot of analysts that are looking at these numbers day in and day out, seeing the demand trajectory being there, and then if you just trust Jensen, take his word for it, whether you believe him or not, if you believe him, you've got to think the stock is deeply undervalued. If you don't believe him, the stock's overvalued. And obviously Michael Burry doesn't believe him, but you got a lot of the world that does believe that NVIDIA is going to win. So I don't think NVIDIA is going anywhere. GCP is still buying a ton of chips from NVIDIA for their cloud computing providers or for their cloud computing clients. GCP has to buy a lot of those NVIDIA chips to be able to rent them out to a lot of their clients. And so I think from that perspective, NVIDIA is going to be okay. Pouncy right there, that's down about 1%. Broadcom did get an upgrade today to 450 from JP Morgan. The same argument being that, hey, we think Google TPUs are a tailwind for Broadcom. That stock, though, is down about 1.6%. Amazon almost breaking even in the pre-markets right here. And then you got Bitcoin back at 86,259. Okay, so let's get into a bunch of other headlines we have, because we have a ton of other things that are happening in the pre-markets. Yes, that is bullish for Amcor as well. Broadcom and Amcor have a very close relationship, so it's good that they are working together and that Broadcom's getting more of a light. By the way, last thing on NVIDIA, they did announce another partnership right here. So I don't know enough about Synopsys, the company, a $77 billion company. I really just haven't looked into them, but they announced a strategic partnership to revolutionize engineering and design, NVIDIA and Synopsys. Multi-year collaboration combines NVIDIA CUDA computing, agentic physical and AI, and Omniverse digital twins. The companies will also partner on engineering and marketing efforts to adopt GPU-powered engineering solutions. Synopsys is up 7% of the pre-markets. NVIDIA is also investing $2 billion in Synopsys. So again, I don't know enough about Synopsys. This deal is going to make me actually learn more about their business. But once again, NVIDIA has more cash than what to do with it. The bears will say they're investing $2 billion in Synopsys because they want Synopsys to buy their product. The bulls will say NVIDIA has to put the money somewhere. They're putting it back into the ecosystem. And so as I learn more about Synopsys, I'll have some more details on what exactly that deal entails for NVIDIA. Last actual thing on NVIDIA and Google before we get to some headlines. You did have a familiar face do a new podcast over the weekend, Mr. Elon Musk. Here is what he said about where he would put his money if he was an investor.
I mean, I don't really buy stocks, so it's not like I'm not like an investor in. I don't like look for things to invest in. I just try to build things, and then there happens to be stock of the company that I built. But I don't think about should I invest in this company, or I don't have like a portfolio or anything. So I guess. AI and robotics are going to be very important. So I suppose it would be AI and robotics that aren't related to me. I think Google is going to be pretty valuable in the future. They've laid the groundwork for an immense amount of value creation from an AI standpoint. Nvidia is obvious at this point. I mean, there's an argument that companies that do AI and robotics and maybe space flight are going to be overwhelmingly almost all the value.
Elon obviously takes some time as he's answering questions. So that is how Elon tends to engage in interviews. But it was a decent interview. I watched a little bit of it last night, and you got Elon saying, hey, hard to imagine that Google is not going to be a winner here. I think the sheer amount of evidence Google has put out, especially with Gemini 3, has captured Elon's attention pretty heavily. And for Elon to, Elon competes with Google in a variety of different ways. For him to be able to be like, yeah, these guys are setting up a foundation to really win, I think is important. And then, he says NVIDIA is obvious. So Sundar, Elon, you had that Google DeepMind researcher on Wednesday tweet that the NVIDIA sell-off is stupid. I do not think there is a fundamental problem here with the NVIDIA thesis, although it is a really exciting story. And that's one thing that I think is very important for people to understand as well. By the way, Amazon and Google, another partnership today in cloud services. The initiative will enable customers to establish private high-speed links between the two companies' computing platforms in minutes instead of weeks. So you got the biggest hyperscalers continuing to collaborate as per this announcement in the morning. It is a really exciting story for NVIDIA to be potentially dying. And I don't think Dylan Patel, given the type of integrity he has, put out a report on NVIDIA's moat being threatened by Google TPUs purely for selling newsletter subscriptions. But you got to admit that it was going to sell a hell of a lot of newsletter subscriptions, which I think he charges like $500 a year, if you've got people wondering if they should sell their NVIDIA because Google TPUs are going to kill the company's margins and moat, et cetera. So like, I don't think he's doing it to like just, sell research, but it is hard to ignore the fact that that is a juicy, juicy story. across the entire media landscape, not just someone who's working in semiconductor consulting research, that, hey, if NVIDIA's done, like, people want to know why, and people want to see the death of, one of the largest companies in the world. And so I think from that perspective, you're also just going to get a ton of people that try to find whatever bear case they can. I just try to keep it non-emotional, look to the numbers. Like, I'm not even as emotionally attached to NVIDIA as I am to Palantir and Hood. Like, obviously I've got some emotional biases there, but when it comes to NVIDIA, like, I was pretty bearish NVIDIA for the past couple of years until DeepSeek. And that's when I took the opportunity. And as I learned more about it and you look at the multiples, this stock is cheap. Like, if you believe in their EPS growth, it is trading at a relatively reasonable multiple. That's cheaper than a lot of names in the market. The obvious one that you guys have heard many times by our good friend, the Milkman, Costco and Walmart still trade at 35 times and 50 times for Costco next year's earnings. NVIDIA trades at 24 times. So I just don't think it's that scary here when we think of NVIDIA and their price action. Okay, other headlines that we've got. Benny says, when will Robinhood put out a prediction market for when Amit's going to shave his beard? That is a great prediction market. They actually should put it out. That would be hilarious. Speaking of prediction markets, I've been researching the entire field a lot over the past couple of days. I mean, that was kind of like one of the things I decided to research more over the weekend. My goodness, am I getting bullish on these prediction markets? The reason Robinhood stock was up 10% last week, even though crypto was relatively flat, was because they took a stake in a new market-making subsidiary in partnership with Susquehanna. And essentially, Robinhood is telling the market we're eventually going to get rid of Kalshi, and we're going to be doing the market making and providing the liquidity for these trades by ourselves, which is going to save them a lot of money. Polymarket's CEO did a 60-minute piece on CBS yesterday, and I can't play it because CBS is going to copyright it. But if you watch some of the clips, the way he's thinking about prediction markets as a financial ecosystem and institution at the end of the day, or I guess you say financial product, to price the risk of everything in the world, every event on the planet, which obviously influences stock prices, bond yields, etc. I mean, it's incredibly, incredibly valuable data. Financial institutions across the world are going to be paying a lot for that data. They're going to be paying a lot to help market make on that data. And they're going to be paying a lot to make sure they can gain insights from that data to make their own decisions across a variety of other assets. And so based on the power of these prediction markets, you can understand why Robinhood is so excited to take a real stake and develop it into a stronger ecosystem. But I think this is going to be $1 trillion industry over the next decade, because you're just going to have more and more people speculating on more and more events. And as it becomes more normalized, that data is going to become intrinsically more important. And the companies that have the best distribution, because at the end of the day, the prediction market itself is a commodity. There's nothing special about it outside of the ability to get people's attention. That is going to be very attractive. So I think the prediction markets are going to win long term. Kalshi did get hit with a pretty ugly lawsuit from Nevada over the weekend, and so you're going to have those ups and downs. But I think it's here to stay, and I think we're going to get more and more of our truth from these prediction markets long term. The other thing that's important about prediction markets is that, look, I know a lot of people compare it to gambling, but here's a simple reason why you can't easily compare it to gambling. When you gamble at a casino, there's something called the house, and most people have heard of the term "the house always wins." When you're gambling on DraftKings or FanDuel, you are betting against the house. Like, at the end of the day, your odds inevitably end up not going the best direction because the house tends to win more often than lose. On prediction markets, you're not betting against the house. You're betting against someone else. So it's like, if you think the Lakers are going to win tonight and I think the Lakers are going to lose tonight, I'm not betting against the casino that the Lakers are going to win or going to lose, which they have this intrinsic edge. I'm betting against someone else who is making the market. So in that respect, and I think the Polymarket CEO made a good point about this last night, like, these gambling platforms, and people have probably had experience with this, if you're winning too much, if you're too good at gambling, like, they will shut you off. They will close your account, or they will limit the amount of trades you can make, simply because of the fact that, the house always wins, and they can't have someone just winning every single night who has an edge. This goes back to like counting cards and blackjack, all that stuff. With prediction markets, that doesn't necessarily exist, because you're taking other people's money that are betting against you. You're not taking the house's money. So is there still a VIG? Yeah, there's probably still a VIG in some way. And obviously the market makers that are involved in this probably get their split as well. But it's not intrinsically the same as betting against the house. So I don't know. I think there's some nuances here. And again, yeah, someone said that's true. It's happened to me. It's happened to a lot of people as I was researching over the weekend as well, that there's more and more. And I was trying to, like, as I was looking, I was trying to see what is, the differentiation between prediction markets and like just straight up DraftKings. And in one, there's a house. In one, there's two people that are like Kamala Harris or Donald Trump. You have two people that are individually reflecting their own opinions on who they think is going to win the election. You don't have a house that's deciding it's Harris or deciding it's Trump. So I don't know. I think there's a nuance to kind of how this is all playing out, but I also think as a hedging tool, for example, if your stock market portfolio is very open to, rate cut volatility, if you are long Nvidia and then we don't get a rate cut, but you bet no on a prediction market that we're not going to get a rate cut, your Nvidia stock might go down, but your prediction might go up. And if your prediction goes down, then that's your hedge that went to zero, but your Nvidia stock went up. So I think there's a lot of different speculation tools in this. I can understand why Robinhood wants to make this a big industry, and I think it will continue to become a big industry. Macro news, Bank of America tweaking our call, 25 basis point cut in December, terminal rate unchanged. They believe we are going to get this rate cut. Bank of America originally did not think we were going to get this rate cut, and they've changed their mind. Why did they change their mind? Well, it seems kind of obvious now that we are going to get this Fed rate cut, as Fed President Williams and Fed President Daly have signified that we're going to get a rate cut. And as a result, it's hard for some of these big banks to continue to imagine that this rate cut is not going to happen. On top of that, you had a really successful Black Friday. Here's what Toby Luke, the CEO of Shopify, had to say as well. Merchants' total Black Friday sales were $6.2 billion, up 25% year over year. The edge peaked at 489 million requests per minute, which is kind of crazy. App servers handled a peak of 117 million requests per minute. The peak database queries reached over 53 million per second, and 2 million were reached as well over a second from the queries on the database. And the API processed over 31 million requests per minute at their peak. So Shopify had a massive, massive Black Friday, 25% year over year. Every year they've been compounding at around 20 to 25%, showing again, maybe the consumer isn't as weak as we think. Adobe Analytics say that U.S. online Black Friday sales hit a record 11.8 billion, up 9% year over year, with another 5 billion expected on Saturday, 6 billion on Sunday, and Cyber Monday, which is today, projecting 14.2 billion. Salesforce is imagining Black Friday spend will come in at about 18 billion, up 3% year over year. So look, if we think the consumer is okay and we think we're getting rate cuts, you can understand why Bank of America is saying, all right, we have to kind of tweak our call on how we think the rest of the year is going to end up playing out, and why a lot of these firms continue to have this like $7,000 to $7,500 target, because there just might be a chance for the macro to tune in the favor of the bulls. And then on top of that, you got this from Hassett, or you got this from Trump. Trump said that he's made a decision on who is going to be the Fed chair. He has not explicitly said it's going to be Hassett, but pretty much all of us know it's going to be Hassett. Hassett did say over the weekend that if Trump were to pick him, then basically he implied that he would be, let's just say, obedient. He didn't use that exact word, but he would be pretty on par for what it means for Trump's agenda. And so you'll likely get some rate cuts. So I think if the consumer is decent, which again, all the retailer companies that reported last week, whether it was Abercrombie or Kohl's or Best Buy or Urban Outfitters, I just could not believe the numbers that we were seeing to the upside. And then you had Black Friday that turned out to be pretty good. Again, Shopify up 25% year over year. Someone's spending that money to buy these products on Shopify, and that is probably a consumer that is getting ready to spend more for the holidays, which means there is some more disposable income. And you've got some monetary easing in place, or getting ready to be in place, with the end of QT and the beginning of further rate cuts. And then earnings continue to be where they have to be. I mean, maybe it's not too bad. Maybe it's not too bad. So I think the sell-off this morning is more to do with what's going on with crypto in Japan, but we will find out over the coming days kind of how this is playing out. By the way, Piper Sandler also said the same thing this morning. Piper Sandler said it's hard to imagine that the consumer is as weak as it is. She says concerns about a weakening U.S. economy might be overstated. Historically, solid consumer spending has helped revive job markets after slowdowns. With profits strong, they expect hiring to pick up by the second quarter of 2026, and says early signs of job growth are already appearing, which is kind of what we saw in that labor market data last week as well. The jobless claims came in at 216,000 versus 220,000, which is way better than expected. It's nowhere near the recession at 350,000 jobs a week we should be losing. And as a result, that might be securing a little bit more macro or securing a little bit more frameworks for the macro to not be in as bad of a situation as we thought it was going to be last week when we weren't getting a rate cut. And so over the coming weeks, I think we'll get more details, and we'll get a lot more macro data as well to see how this plays out. Ondas, they secured an $8.2 million order from another major European airport. That stock, are we green? It was down last week. It's down 1.5. It was up 30% after earnings. So for those that are bullish on us, this one has been executing pretty well. I don't know that much about the company. I know they are a drone platform, but they've been definitely getting a lot more attention in the drone space. By the way, Kratos was upgraded to a buy, another drone company today. Joby actually got downgraded to a sell, price target of $10 by Goldman Sachs. Joby right there, down about 5% as well on the day. Yeah, we talked about the Amazon Google multi-cloud networking service. Amazon and Google have collaborated for years together, so it makes sense that they're continuing to come together. But you're seeing more and more of the hyperscalers work in tandem with each other. By the way, here's that report I was telling about Morgan Stanley and their upgrade on Google's AI chip sales. So Morgan Stanley sees Alphabet selling 12 million TPUs over the next 2 years. That's up double. They thought it was 6 million. Now they think it's 12 million. Every 500,000 TPUs could add 13 billion in revenue to Google. Pretty bullish. Could contribute 40 cents of EPS to Google in 2027 alone. The surge in demand is likely tied to AI workloads and GCP expansion. Also, the idea that Meta is buying it is going to get a lot of people to wonder, hey, maybe we should be buying this over Nvidia. Jensen, again, is going to be live in about 5 minutes on CNBC, so we'll see what he has to say about this new deal, $2 billion investment in Synopsys. Morgan Stanley thinks that there's going to be a strong supply chain confidence in Asia, increase in production signals new TPU monetization strategy, and as a result, they think these TPU sales may complement GCP offerings for Google. So I don't think this is bearish Nvidia. I think it's bullish Google. I know people are trying to paint it as bearish Nvidia, which again, I think anything bearish Nvidia is bearish, not only the entire market, but for the people that think Nvidia is just going to die and another company is just going to win, I think are fundamentally misanalyzing the competitive ecosystem. If Nvidia dies, I think a lot of the companies are falling with it. Not to mention all the supply chains that Google would have to be using as well as Nvidia to be able to even get to the level of production that Nvidia is doing at scale. So I don't think Nvidia is dead. I think Nvidia will be fine, and I think Google will be fine as well. This is very bullish for Google, but this is not bearish for Nvidia, in my opinion. Speaking of Nvidia, I mean, take a look at this chart right here. 3 years ago, on November 30th, ChatGPT was announced. Since then, the S&P 500 has added $24 trillion of market cap, which is 2,900 points. From basically 3,600 to 2,800. That's 22 billion per day for the past 1,096 days. That is why this has been one of the greatest 3-year stretches in history for the stock market, because we just haven't had a technology that's been able to do what AI has been able to do and add the type of market cap that it's added. The question is, does this all end with a massive bust, or does this end with, continued stability as AI just increases earnings and productivity at scale? And hoping it's the latter, but you got a lot of people speculating on if it would be the former. Let's finish up with Tom Lee. We got 3 minutes until the market opens. We will get the market open, and then we will get Jensen on, and then we will keep going from there.
A decline, sorry. Maybe because the Bank of Japan looks hawkish.
Yeah.
But I don't think the 4-year cycle, I don't think the Bitcoin high is in place. But you're right. We were too optimistic about this happening by December. But I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
He's right about that. Obviously, a dovish Fed is a tailwind. I guess the question is, how much of a tailwind is it for crypto? And I don't know. I mean, the idea that Bitcoin gets to 100K or Ethereum gets to 4,200 again quickly, I mean, maybe it happens. Tom Lee still thinks the best 10 days in a year define crypto or define like Bitcoin's price action. And maybe those best 10 days have yet to happen. And if it does happen towards the end of the year, then you get a massive run. If so, then Bitmine, MicroStrategy, those companies should do well. Bitmine announced today they now have 3.73 million ETH tokens. They control now more than 3% of the entire ETH supply. They will begin staking in the first half of 2026. 12.1 billion, 882 million in cash, 3.73 million Ethereum. They bought 96,798 ETH over the last week. So he continues to buy the dip, and if that dip ends up working out, then you will have a world in which ETH appreciates. But at this point, you kind of have to buy the dip if you believe that Ethereum is going to be what people think it's going to be. All right, folks, here we go. Thank you, everybody, for being here. Hopefully, everyone had a great weekend. Very, very thankful for all of you being here and thankful to be back and in action. It was a good break, but once again, the stock market is now open. All right, it's been a while since the bell, but we are back. Wake your ass up. Here we go. Google opens up at 319. That is down about 0.39% on the day. Ondas, we had that announcement in the morning, 8.2 million from a European airport. That's actually up 0.51% in a sea of red, which is incredible. So that stock really getting some love right here. Joby down 6% after the downgrade today from Goldman Sachs. Nvidia down 1.28%. S&P 500 down 0.5%. Intel down 1.18%. Intel was up 10% on Friday based on a rumor of them working with Apple. Not confirmed, but that really helped the stock back on Friday. Amazon is flat on the day, 232. Amazon actually one of the only Mag 7s that's flat. Everything else is pretty much down. Tesla's down about 1%. Michael Burry did say Tesla stock is ridiculously overvalued over the weekend, so it looks like he's coming after Tesla now. Robinhood down 4%. MicroStrategy down 6%. MSTR is getting hit right here. Rivian's down 1. Oscar's down 3. Oracle's down 1.3. Oracle back below 200. Nebius holding 90, but that's down 4%. CoreWeave down 4%. Oh, Dan Ives added CoreWeave to his Ives AI 30. So he is getting a bit more bullish on the Neo clouds. And so you got CoreWeave that, although their debt has continued to stack up as aggressively as it has, it's kind of creating the pain. He took off Salesforce, ServiceNow, and SoundHound, and he added CoreWeave, Iren, and Shopify. He took off Salesforce, ServiceNow, and SoundHound, and then Iren, CoreWeave were added. Webull, that's down 4%. Roblox, that's down 2%. Reddit, that's down 2%. Uber, that's down 1%. Wingstop down 1%. Cheesecake down 1.4%. Microsoft down 1%. Apple down 0.5%. AppLovin, that's down 3.3% as well. I'm going to switch over to Jensen. He is live right now. This is another $2 billion investment that the company has made. This is joining a string of investments they've made over the past couple of weeks. So let's pull that up and see what they have to say here. All right, here's John.
Their software and all the tools that the industry, the world's been using for some 35 years to be GPU accelerated on Nvidia. They're going to pivot the company to build on top of Nvidia CUDA, physical AI, as well as Omniverse, so that we could revolutionize all of these tools from EDA to SDA, system design automation, to CAE, to computer-aided drug discovery. This is going to expand the market of computing into the world of design and engineering for the very first time. This partnership is going to be revolutionary for that entire industry, expanding their TAM, expanding the capabilities. You know what's really amazing, Jim? This is really the culmination of everything I showed you when you visited NVIDIA years ago. It's taken this long for us to create the software stack necessary for...
BMNR down 10%. BMNR, MicroStrategy getting hit. A lot of those crypto derivative plays getting hit pretty bad this morning.
Synopsys and the rest of the EDA industry and SDA industry in order for them to accelerate the software that they've historically only ran on CPUs. And as a result, we're able to do simulations at a speed and scale unimaginable in the past, so that we could do basically the entire engineering work inside a computer in a digital twin before we have to build it at all. So the type of products we can invent and the quality that we could do and the speed that we could do it at is going to be extraordinary.
Right, Jensen, I think that when you first introduced this to me, you explained to me over and over again, because I was so fascinated by what could happen with a chat GPT with the prompts, was, Jim, that's business to consumer, and it's really, really important. But you better start thinking enterprise. Enterprise is, you were using a number that is 10 times the size of what I was thinking about. Are you still standing by that?
Absolutely. If you look at what we're doing today, if you look, we've been partnering with Synopsys for a very long time. NVIDIA was built on a foundation of design tools from Synopsys, and of course many other companies like Cadence and Siemens and Dassault. These are very important companies that the entire engineering industry is built on top of. As a result of what we're able to do today, we're able to bring GPU accelerated computing, NVIDIA's CUDA, into the world's industrial sector for the very first time. This is physical AI. This is AI that obeys the laws of physics, that AI that interacts with the physical world. This is extremely complex stuff. It's taken us years to be able to do this. And now, if you look at the world's industrial sector, it's measured in trillions of dollars. So for both NVIDIA and Synopsys and the entire industry, this is a giant expansion of opportunity.
All right, so we'll go back to that in a bit. Jensen not really saying anything that we don't already know. It's another partnership, and that partnership should be expanding the TAM for accelerated computing, which is bullish, but it's not like the market doesn't fully understand that yet. S&P 500 right there, 679, still down about 0.56%. Nvidia getting a little bit of a pump, potentially from Jensen talking right there. We'll hear from the Synopsys CEO in a little bit on their perspective, but a lot of this has to do with physical AI and the Omniverse, Nvidia's platform using synthetic data to train. And so it seems like that's where the collaboration is stemming from as well. Amazon actually going green is interesting today. I kind of have this theory that's just a random theory, but I don't think it's too controversial, that Amazon's probably the next one to go to 300 now that Google's done it. And for Amazon, my logic is very simple. AWS is expanding and accelerating since 2022, as per the last earnings call. And robotics will increase operating margins. Like, it's a very simple thesis. AWS is growing, accelerating, not just growing, and operating margins should inflect over the next 5 years, which should get the stock higher. So, maybe the market is looking for mispriced Max 7s, and Amazon is popping up. Meta, by the way, had an amazing run last week. Meta 639, that's down 1.2, recovering a lot of what it lost in the pre-market. Meta was at 585, now basically touching 640. So if anyone bought that 585 dip, you are doing pretty well. There is an argument that whether it's a TPU or a GPU, if Meta has to pay less and get more return on their investment, then that is something that the market's going to care about, which is bullish for them. Nvidia trying to recover and go green. BMNR also, it was down 10, now it's down 8. So you got a little bit of a green candle right there. And Tesla goes green, 430 on Tesla. Wow. So Tesla's the first Mag 7 to officially go green today. Google is still red. Apple is still red. Meta's still red. Meta, although it looks like it's about to go green. Microsoft as well is still red. Again, Iren, CoreWeave, and Shopify were the ones that were added into the Dan Ives AI 30, his top 30 AI names going into 2026. He took out Salesforce, SoundHound, and ServiceNow, which I think is reasonable. You take out some software players for 2 neoclouds, and then, SoundHound I never fully understood. It looks like he replaced that with Shopify. Shopify is just like a phenomenal company. Looks like AI is going to be a massive tailwind for them as well. So maybe that's why those stocks are getting some green. Microsoft right there, 486. Iren also getting a green candle. That one's only down about 2.86% on the day as well. Oracle, do we have Oracle green? Not yet. Oracle still down 197.81. Again, their credit default swaps last week was of much discussion. Eli Lilly continues to go higher. Market potentially continuing to rotate into healthcare. Open Doors down 3%. AppLovin's down 2.5%. You got an upgrade on Reddit. Piper Sandler. We like the setup for Reddit into 2026. Price target 290 on Reddit. Okay, so you got an Reddit actually is the next deep dive I'll be doing. I think that should be out by this Saturday. So we will get to know Reddit a bit deeper. Let's go back to Jensen and the Synopsys CEO and see what they have to say.
Wait a second.
Solutions for semiconductor design and verification. With the Ansys acquisition, it expands our TAM for every engineering workload. Think about any product that you just mentioned, be it automotive, robotics, drones, machinery for industries. They're getting so sophisticated. They're going to become AI-driven, meaning to design these systems, you need sophisticated engineering solutions in order to deliver these systems on time, deal with the complexity at a cost that is affordable. So now with the Ansys portfolio, it expanded our TAM significantly. In order to deliver these solutions and delivering it in time for the customer to be able to simulate, you need acceleration, be it a GPU, be it AI to change the workflow, digital twin of the whole system.
Imagine he said, be it a GPU, be it a TPU. Jensen would have punched him in the face, bro. He's like, don't say those three letters. You replace the G with a T and my stock is going to fall another 300 billion in market cap. So thankfully he didn't say TPU.
You need to re-engineer engineering in order to deliver to these sophisticated future products.
Wow, re-engineer engineering. I'm looking at Carl. It's companies really just
Going through a platform shift from classical general purpose computing running on CPUs to a new way of doing computing, accelerated computing running on GPUs. That old way of doing is going to continue to exist, of course, but the world is shifting to this new way of doing computing. That the cash flow of the world's hyperscalers are at the core really about supporting this platform shift. With or without agentic AI, with or without chatbots, the world's hyperscalers would have made this platform shift anyhow, because this is a much more efficient way of doing computing. General purpose computing has really run its course. Moore's law, as you know, is slowing tremendously. And so the world needs a more powerful, more capable way of doing computing going forward. And so at the foundation, it's that. The second thing to realize is that AI is not just chatbots. Chatbots are incredible. Cognition AI is very important, but AI covers the entire world of physical AI, industrial AI, robotics, sciences, digital biology. AI is going to transform every single industry. This is the part that we've been talking about for a very long time. You and I have been talking about this literally for years. It's just less visible because consumers don't have to use engineering tools that we use from Synopsys and Cadence and others. We don't, our companies use these tools because it's mission critical to us. These industrial applications, these industrial tools where accelerated computing and AI are now in the process of revolutionizing, are foundational to our industries. It's not optional to us. It's mission critical to us. And now for the first time, we're at the tipping point of that, and we're going to revolutionize the industrial software industry with it.
And just to give you a sense, Jim, what Jensen's referring to, you're taking a workload that may run for 2-3 weeks and reducing it to hours. And that's the value we're delivering to the customers through this partnership and accelerating the software on GPU from Nvidia.
Right. Although, Jensen, I'm sure you can sympathize with viewers who are trying to keep up with just your deal flow. We're trying to keep up with your deal flow. And I guess you must, I'm wondering your communication strategy. How do you keep people afloat when they can't be expected to understand that view from 40,000 feet?
Well, we'll just kind of keep trying harder, Carl. I think that the important concept here.
You can tell Jensen's a little annoyed, right? Like even the way he said it, well, we're going to keep trying hard. It's consistent with the memo that got leaked from the Nvidia all hands meeting 2 weeks ago after earnings, which is that Jensen's like, dude, if we win, people say we're a bubble. If we lose, people say the bubble's popping. So you could tell he's just trying to get people to realize this is real. The demand is real. The earnings are real. We're not Enron. AI is very real. And you either believe it or you don't. And as a result of people not believing it, I think that's what's making Nvidia one of the cheaper Max 7s right now.
Is that accelerated computing and AI is revolutionizing every single industry. Of course, it started in the consumer segment. And the reason why it starts in the consumer segment is because getting the answer 90% right is a pretty magical thing. But the industrial segment, that 10% you don't get right, becomes mission critical. And so it takes longer for us to create the tools, create the technology necessary for the industrial sectors, the enterprise segments, to be able to adopt this technology. But the time is now here. This platform shift that happened starting about 10 years ago, starting in consumers, is now in the process of happening across the world's industries. Let me give you one statistic. I think this is actually about the same time that I met Jim. During that year, 2016, the world's scientific supercomputers was 90% CPUs and 10% GPUs. This year, it's 90% GPUs and 10% CPUs. The platform shift has happened. Now, that's in scientific computing. What Synopsys does, what this industry does with engineering, is founded on science, founded on physics. And so principled physics, we're in the process of making the shift in this industry now. This is one of the most computing intensive industries in the world. And now during this transition, we're now doing the platform shift for this entire industry and elevating it with AI. We're going to expand the market really tremendously for this industry. It's really exciting time.
Okay, so let me just follow up on that, Jensen, because
All right, we'll finish up with that in a bit, but you got Jensen kind of making the same case that he's been continuing to make for a while, and this new partnership with Synopsys is another one in the string of partnerships that they have. Tesla right there goes red after going green. Meta continues to go red. Amcor was green for a second. That one now went red. Nvidia goes green. There you go, 177. So Nvidia took some of Tesla's green. Bitcoin as well trying to go green. Amazon staying green. Amazon, Nvidia, the only green names I see in the Mag 7. Rivian's up about 1%. AMD, did we go green? AMD, wow, 217. AMD took a nasty fall last week or 2 weeks ago from 260 to 195. Back up to almost 220 is nice to see. Yes, June is right. Synopsys works heavily with Broadcom. That is absolutely correct. Broadcom right there, still down 3.7. I think Broadcom is just chilling off a little bit. I mean, it had a major week after the Google TPU stuff. Broadcom's still up 67% compared to NVIDIA, which is, I think, less than 30% for the year. NVIDIA year to date, yeah, 28%. So you got Broadcom heavily outperforming NVIDIA. Google right there, that's down 1.3. S&P still down 0.5%. Micron's down 1.5. Nubank at 1742. Abercrombie, that's up 2.4. Open Doors down 4%. Then AppLovin, that's down 2.7% as well. PMI, I think we've got that. We had some ugly PMI last week, which is kind of bad news, was good news. Today we have global manufacturing PMI 52.2 versus 51.9. That's a beat. Not a big beat, but that is a beat. So that potentially could give us a little bit of green on the S&P. Yeah, doing it a little. There's your green candle right there. Still down on the day. So PMI is relatively strong. Again, we're going to get a lot more macro data over the coming weeks. We'll get ISM manufacturing PMI in about 15 minutes as well. Actually, over the coming days, because now the government's not shut down. So jobless claims, JOLTS data, all that stuff we should be getting soon. S&P 680. Look at that. Closed at 683 on Wednesday. Microsoft still down 1%. Tesla 427. And the BM&R down 7. I think the markets kind of had to open up red in the morning simply because the crypto sell-off was so large it started affecting equities. If that reverses, because when futures went red yesterday, I mean, no one had a headline. There was nothing you could point to outside of just crypto. And it's like, okay, so crypto's down, so futures are down. But if the market is either going to reverse the crypto sell-off or at least stabilize the crypto sell-off, equities didn't have a reason last night to necessarily get hit like they did. Nvidia up almost 1% right there, 178.20, as that continues to go green. Amit, are you still bearish on open? I think Kaz is going to be Carp 2.0. I have a lot of respect for Kaz. I don't know if he's going to be Alex Carp 2.0. Just my personal opinion. I think there are some fundamental differences between Carp and Kaz. And number two is just, I just don't understand the business model still. And I don't know, dude. Like I at the end of the day, they need to get a margin on the homes they're selling, and nothing over the past 6 months of the stock going from 50 cents to $7. I've not heard a single piece of analysis on how they're going to increase their spread. And so that's what still scares me. But I just want to take the risk. Forget even being bearish. Like I'm not taking with Nvidia trading at 25 times earnings. I'm not taking the risk on Open Door when mortgage rates are not even below 6%. You know, so it's now if you bought it at $1, maybe you don't need to sell because maybe it's a moonshot. But I still don't understand how they're really going to make money and be profitable long term. Bitcoin right there, 86,000. Amazon 234. That's the high of day. Robinhood recovering a little bit to 124. And then you got Palantir at 167. A lot of chatter over the weekend about GameStop. GameStop right there up 0.38%. Apparently, Michael Burry was long GameStop in 2019, and he's been tweeting all these screenshots of like him emailing the board of directors, and you just have a bunch of things of him talking about the board, and he emailed Keith Gill and all this stuff. And I don't know if he's gearing up to go long GameStop again. They do have billions in Bitcoin and billions in cash. But it is kind of weird for him to be bringing up his August 2019 letter from his management firm to GameStop's board of directors. I think GameStop has a really interesting opportunity in the trading card space, and they actually accelerated revenues last quarter for that. I still don't know if I would invest in them just based on their cash pile and that part of the business, but Burry tweeting about GameStop is interesting. I mean, maybe he goes long GameStop, which would be kind of crazy to be short Nvidia and Palantir and be like, yep, I'm going long GameStop. But maybe that's the route he wants to go. Again, also over the weekend on Tesla, I don't know if he would actually go after Tesla as aggressively as he's going after Nvidia, because the Tesla cult is a bit different to go after. But he does say that Elon's Tesla is ridiculously overvalued, and he put out another Substack yesterday. Now his latest thing is Nvidia stock-based compensation is like bearish. I mean, he's just like, he called it the tragic algebra of stock-based comp. I'm just like, all right, every day he has a new talking point for why to be bearish Nvidia, but I don't know if the stock-based comp is the best argument to go after. Let's go back to Jensen and finish up this interview with Synopsys.
But when it happens, the size of the industry is incredibly large. As you know, the world's $100 trillion industry is largely industrial and enterprise to enterprise. These are enterprise, serious industrial enterprise applications that are now being transformed by this platform shift.
But all right, so am I supposed to believe that what'll happen at a lot of the Dell conference call where Jeff Clark talked exactly about AI factories, that we're going to see a new shift, that we should be thinking about how much GM is spending, how much BMW is spending, how much Siemens is spending, how much the big Korean shipyards are spending? Is that what we should now add to the mix, and not just Perplexity against Anthropic?
Exactly. If you think of all the companies you just mentioned and the percentage of R&D they invest in automation and software, etc., is going to become exponential, driven by the complexity and the sophistication of what they're building. So if they were spending 2% of their revenue in R&D dedicated to the software automation and the technology, is going to get significantly higher due to complexity in order for them to remain competitive and delivering for the future.
All right, and then Jensen, I know
here's an easy way to think about it. One of the things that's really important is almost all industrial companies that make things like Nvidia, like GM, like Boeing, these are companies that spend probably hundreds of millions, maybe very low billions of dollars in engineering software tools. However, the amount that they spend in prototyping all of those products is easily 10, 20 times higher. It's absolutely the same case here at Nvidia. We spend a few $100 million in EDA tools and design tools. However, we spend billions of dollars in prototyping it. In the future, we're going to prototype all of these products digitally so that we don't waste any money when we build it physically. In order to prototype things digitally, simulate it inside a digital twin, this is all the things I've been talking to you about.
Right.
All of a sudden, the market opportunity increases by a factor of 10, 100.
Okay, so last question. Right now, we spend a lot of time talking about Google and what they're doing with their own TPU, and we talk about whether Meta will do it. But one thing that you taught me was you like to think 20 years forward and then backward. I'm thinking about Vera Rubin. I had to go read that Richard Feynman book because you mentioned he's a pretty funny guy. But I mean, when I look at the Vera Rubin and the Feynman, am I going to be saying, you know what, that was a great thing those other guys had during that 9-month window that Jensen allowed them to have?
Listen, we've been competing with ASICs now for quite a long time, and Google has had ASICs for a long time. Nvidia, and they do a great job, as you know, and I've always been complimentary.
Right. Always.
What Nvidia does is much more versatile. Our technology is much more fungible. Notice the announcement today. Accelerating Synopsys design tools, the EDA, the SDA, the CAE tools, requires a computer architecture like CUDA. It's not available for ASICs. And so NVIDIA can address markets that are much, much broader, not just chatbots. We're also everywhere. We're in every cloud. We're in every single OEM. We're on-prem, and we're also at the edge. And so the NVIDIA opportunity is much, much larger. And you're now seeing a real tangible example of an opportunity that we could do with our platform that nobody else can. And so this is a very big opportunity for us, huge opportunity to reinvent the EDA industry, the design and engineering industry for Synopsys and the rest of the industry, and a growth opportunity for us because this is so computationally intensive.
I was just
All right, that's how Jensen answered the Google question. This was his first public response to what's been going on with Google. As Julie says right there, Jensen never trash talking, always pretty respectful, nice. He understands how to handle things very diplomatically. And I think his response is pretty reasonable right there. The sort of precursor to his response was the explanation he gave around the TAM of digital simulations on prototyping. That's something he talked about on the earnings call, but I haven't thought about it too much. These companies that are in the real world creating physical products spend billions of dollars on prototyping. And the data required to be able to create those prototypes, if you could synthetically create those, or at least train on that synthetic data via the Omniverse and Cosmos platform, which is what they're helping Synopsys do in terms of designing that, from a CUDA architecture perspective, which again, Jensen goes, pretty deep every single quarter speaking about why CUDA is the developer application of choice across every single OEM, every single on-prem or cloud computing module. I mean, that is a moat, right? Like, that is a legitimate moat outside of just their monopoly on the hardware that, is getting chipped away as you have these ASICs coming out. But those ASICs don't have that CUDA infrastructure that actually integrates the ecosystem in one place. I mean, to get on Google TPUs, from my understanding, you have to be using Google Cloud. And that might not be suitable to every single customer in the world. But then again, that's the characteristic of an ASIC, which is why Jensen has been so bullish on the sort of GPU versus the variation of the GPU, like a TPU or any other type of variation. So I think it makes a lot of sense what he's saying right there. There's a legit partnership with Synopsys today to kind of be emblematic of that manifestation of why CUDA is so important. But more importantly, once again, Jensen is taking an equity stake in another company that he thinks is not only going to thrive off buying his product, but is going to win in the broader AI sector. And I think the story 10 years from now is going to be Nvidia invested in a ton of companies that just didn't end up working because they had nothing to do with their cash, or Nvidia is one of the ultimate VC firms because they have an equity stake in every single company that is relevant in the age of AI, whether it's OpenAI, Anthropic, maybe Synopsys, and maybe that's how this ends up playing out. Ethereum right there, 2,800. BMNR still down on the day. It was down 10%. Now it's down 7.5. S&P trying to break green right here, 681, $1 away from potentially going green. We did get PMI. It was a beat, 52.9 versus 51.9. We're going to get ISM in about 3 minutes, and that'll potentially have an impact on the market as well. But you can tell from even Jensen's response, he's been thinking about this Google thing for a while, and he gave the same response that he's given many other times he's been asked about custom ASICs. Nvidia has simply a deeper understanding of the industry, and they have a deeper moat in the industry. Not to say Google can't sell a lot of these TPUs, just means Nvidia is probably going to continue selling a ton of their GPUs as well. 178.26, that's up 0.71%. The other thing that's really important as well is that, it's not just Anthropic or Perplexity that are buying these GPUs. When you have Omniverse come into the picture and you have all this synthetic data, they've announced multiple partnerships with tons of other companies. GM is one of the biggest ones. Like, those are companies that have deeper pockets than Perplexity, Anthropic, and that really need to spend to be able to train their own platforms to actually get physical prototypes into the real world, not just, as Jensen said, train a chatbot to be better. And so it does feel like that TAM is only getting larger and larger. And, that should sustain the earnings growth for NVIDIA. And if you think it sustains the earnings growth, then NVIDIA is cheap. NVIDIA becomes one of the cheaper Max 7s. Tesla right there at 429. That one trying to go green as well. Speaking of the consumer and kind of this idea that we were discussing earlier on in the show, we saw that Toby Luke, the CEO of Shopify, said that Black Friday sales were up 25% year over year, which is quite incredible. Take a look at this stat. Buy now, pay later usage surged on Black Friday, 9% overall. It was higher. 41% of shoppers aged 16 to 24 used BNPL. Younger millennials increased their usage by an astonishing 87%. Klarna, by the way, said the same thing, which is a buy now, pay later company. They said we saw a 45% year-over-year increase in sales from November 1st through Black Friday. And their data is based on online and in-app activity. The company serves 114 million users and 850,000 retailers globally. Now, again, you can interpret this data as bearish if you think that Black Friday, or that buy now, pay later on Black Friday, is the consumer saying that we don't have the money to pay, and so we need to take out these BNPL loans. That's one point. But on the other hand, the consumer is spending, which is what I think the job market has been trying to, or the Fed futures probabilities of trying to figure out, is the labor market having that much of an impact on the ability for consumers to spend? Because if it's not, then maybe it's not as bad. Now, if the consumer is spending with money they don't have, it could be that bad, but data will tell exactly how delinquent those loans potentially become. Meta right there at 644, that's down 0.5%. Intel down 2%. Then Rivian, 3% on the day, as that one gets green. Someone just bought 200 grand of Rivian $18 calls for December 19th. I'm seeing on the option flow right there. So you got Rivian going green. Yes, quantitative tightening should be ending today, if I'm not wrong. For whoever said that in the chat, I believe you were correct on that. Today should be the day, December 1st. Yeah, December 1st. The end of QT is effective December 1st. The Fed will stop letting its balance sheet shrink, which is kind of ironic that Bitcoin is down $6,000 on a day like today. But yes, you are correct. December 1st, which is today, will be the end of QT. Hopefully we get that rate cut. And that's your monetary policy to signal potentially a more bullish Fed going into 2026. Chad says going to BNPL some GPUs. Isn't that what every company is low-key doing? Like, yeah, we'll give it to us now. We'll buy it later, or we'll pay for it later. We don't need to pay right now. But if you can give us a little bit of that GPU, Jensen, that would be nice. Nvidia right there, 178. All right, ISM PMI. Let's see if we got that. Should be getting it any second. 58.5 versus 59.5. That's a miss. Wait, no, I was looking at manufacturing prices. Sorry. 48.2 versus 48.6. Still a miss. Very slight miss. Better than the prices miss, which came in at 58.5 versus 59.5. Employment at 44 versus 47. That's a miss. That's a big one. New orders 47.4 versus 49.7. That's also a pretty big miss. 2 to 3 points on these PMI indices definitely shouldn't be ignored. Manufacturing 48.2 versus 48.6. Employment, new orders, and prices, all three missed. Okay, let's see how the market likes it, or if the market hates it. Yeah, Nvidia's going red. S&P, there's your red candle. We'll see if the market really hates it or if they can move on from it. Bitmine continuing to go red. AMD going red. SoFi, there's your red candle. Nebius, which is actually trying to recover, but that one got a red candle. I mean, that's not that bad, but it definitely is a 2 to 3 point miss. Let's see if we can find out how low that is historically. Let's pull this up right here and see some coverage on ISM.
For November, these are fresh numbers. 48.2, that's definitely on the light side. That would be the lightest since July. If we look at prices paid, 58.5, higher than expected. And in this series, prices paid higher is not necessarily better. 58.5 would be the hottest prices paid going back to September of this year. And if we look at new orders,
that goes back to the Fed's arguing about inflation. Might be ramping up a bit.
Very big disappointment here. 47.4, weakest since July. And finally, on the employment front, 44.0, another big miss. Following a 44.0 would be the lightest read since August. And
so lowest read since July and August, highest read on prices since September. That's what you have for ISM PMI.
Sequentially, well, all the important numbers are sequentially lower. The only one sequentially higher is prices paid. And as I pointed out, we'd rather have that moving lower. Interest rates across the globe have some upward pressure. We see 2-year hovering at 3.52 in the U.S. That's up 3 basis points. The 10-year, after it surpassed the recent ceiling around 404, 405 on the yield perspective, jumped up to 409, hovering at 408, up 6 basis points.
10-year was down below 4 on Wednesday. It probably was just because low volume for Thanksgiving, but it was nice to see this thing actually go below 4. Not that much above 4, but you do have 4.083. All right, so ISM not the best. We'll see if the market cares that much about it. These things tend to get priced in pretty quickly. Nvidia already getting a bit of recovery. Same thing with the S&P. but you are seeing a bit of weakening right there. And you know, the prices going up is not necessarily good for cutting rates, but the contraction since July and August, or at least the numbers being as bad as those 4 months ago, that is your argument for a rate cut. So prices going up, not the best, but contraction continuing to occur means probably more easing is needed. 87.6% chance on those rate cuts. Silver's at an all-time high. Congrats to anyone who is deep into silver. I was actually speaking to my uncle over the weekend. It was his birthday. And he's been loving the move in silver because he's been long silver for a while. Gold, by the way, as well, 4,200, back to 42. And then silver, 57. Silver's, you know, highest ever. It's basically been a 10-year breakout. Last time it even got close to these levels was back in 2011. And so you're seeing a real breakout right there. Now, look, the general argument around commodities going up like this is it's bearish for equities, because it's like the market's trying to tell you that we think something bad might happen. Then again, you might also just have a level of debasement trade, the debasement trade taking place, which is leading to people leaving treasuries and going into commodities. You could have an argument that maybe commodities are overvalued and there's just hype and euphoria coming into them. So like maybe they're not telling you that equities are bad. Maybe the central bank purchasing of gold is hyping up all the other commodities. And then the other argument is kind of what Evercore said a few weeks ago in their note to clients, which is that we might be setting up for an everything rally. And that everything rally in 2026 could be based on a very, very cooperative Fed, really good AI earnings, and the debasement trade. Essentially, the dollar continuing to weaken and people wanting to get out of cash, which means they're going to come into anything they can find, whether that's real estate, commodities, or equities. Now, that could go the opposite next year as well, but that could be one argument. By the way, money market funds last week increased by 45 billion. Nothing too crazy, but still 7.57 trillion is on the sidelines. So silver continuing to make its move as that one goes higher. I don't think, is Jay Powell speaking today? I don't think he's allowed. I don't think the Fed is allowed to speak anymore. Last week was the final week. Yeah, because their meeting's on the 10th. So I don't think we're going to be getting any Fed talk over the next week. The Fed did a lot of talking last week. By the way, Nvidia trying to go for 180, 178.8 right there, up 1%. So I don't think we should get too much Jay Powell conversation. But if he does talk, then, you know, he's probably not going to say anything that would be specific about Fed policy at this point. 8 p.m. Where is he talking at 8 p.m.? When does is he doing like an interview? When does Jay Powell ever spoke at 8 p.m.? Jerome Powell, 8 p.m. Hoover Institution in Stanford, California. Okay, so technically it's 5 p.m. Yeah, I don't know if he's going to be speaking too deeply about Fed policy now that it's a blackout week, but okay, Stanford speech. Okay, but guys, that's not going to be that he's going to be talking, like, it's one of those, like, you know, when you're in that world, you have to give these speeches. Like, I don't know if he's going to give us any juicy quotes that the market's going to react. I mean, the market's probably going to be listening. Nvidia right there, 179. But I don't know if he's going to say anything that is really worth the market caring about. Yeah, I doubt he's going to be talking about policy. He can't. It's a blackout week for the Fed. There's no way he's going to be able to talk about policy. They probably won't even try to ask him questions about policy because they probably know he can't speak about that stuff. Amazon right there, 234. But I'll keep an eye on it and I'll cover if we see what he says. Rumor says he's resigning. I really doubt he's resigning. If he was resigning, he wouldn't go to Stanford and be like, hey, I'm announcing my resignation. Like, also, Jay Powell's too petty to resign, dude. We know Jay Powell's petty. He's not going to give Trump the satisfaction of resigning. Like, that would be too good for Trump. That would be too good. Like, Trump already has a dove with Hassett and Moran. He got a Fed appointment for a governor a couple months ago. Jay Powell leaving would just be I wonder what the markets would do. I wonder if the markets would pump immediately if that happens, or if they would be a little worried. Oracle, by the way, recovering 200. Iran 47.13. And then Tesla trying to go green again at 430. Meta almost going green on the day at 645. 645 on Meta. JPal to apologize for being too late and retire at 8 p.m. Eastern. Do you guys remember this year we saw a picture of Trump and JPal wearing construction hats? Like, did we all forget that happened? I saw this the other day just randomly, and I was like, oh yeah, that did happen. Like, we have lived through so many simulation moments over the past year, and it's been quite incredible to witness, but it was a real thing. And I guess we're going to see kind of how the next 6 months play out once JPal does have a shadow Fed. By the way, remember Masa-san from SoftBank selling his Nvidia? He finally gave us a quote today. Here's what he said. I didn't want to sell a single share of Nvidia, but I needed the money to invest in OpenAI and other opportunities. When superintelligence comes, at least 10% of global GDP will be replaced by AI and AI robots. So you got Masa-san saying, look, we didn't want to sell our $6 billion Nvidia, but we kind of had to if we're going to invest in other opportunities. Basically, he's just thinking OpenAI is going to perform better than Nvidia over the next decade, which, I mean, look, there's an argument that's the case. Like I don't know if that's going to be the case, but you can't blame him for wanting to take their profits there. But people that said he sold Nvidia because he thinks Nvidia is done, it's like, well, if he's investing in the companies that are just going to be buying more chips from Nvidia, then maybe that's not the argument. With QT ending today, will it solve liquidity issues? I don't think it will solve all the issues. I think it will make it a lot easier for liquidity to enter the system. It's not going to happen overnight. But yes, with QT ending today, I think that is very bullish for risk on assets. I think there's this weird leverage stuck in crypto, either from the yen carry trade or either from people going max long 25x on their perpetual futures contracts. I don't know why there's this much leverage stuck in crypto. But it seems like it's not even just a liquidity thing around crypto. It seems like it's this leverage, if you believe that part of the argument. So hopefully quantitative tightening coming to an end will help these crypto assets. Bitmine right there, 30.24. That's down 8.75% still. Rocket Lab down 3% on the day. ASTS down 5% on the day. Where's Quantum? QBTS down 3% on the day. IONQ down 3%. And then Rigetti, that's also down 4%. So a lot of those high beta names still getting hit. Oklo down another 2%. Reddit, 222. That's up 2.74%. Here's something I want to show everybody. I read this over the weekend, and I couldn't believe this as well, going back to this conversation of an AI bubble. So apparently there's this guy who runs a fund, and I didn't know about this until Skrelly reposted one of his letters that he sent out on November 28th. And this is how painful it is to be a bear in the age of AI. And maybe he's going to be right long-term, but I mean, this is kind of tough. So just imagine you invested in this guy, and this is the letter that you get from him over Thanksgiving. For November 2025, the fund was down 5% net of all fees and expenses. By way of comparison, the S&P 500 was up 0.2%, the Russell was up 1%. Year to date, the fund is down 26%, while the S&P 500 is up 17%, and the Russell 2000 is up 13.5%. Since inception on 2011, the fund is down 8%, while the S&P 500 is up 567%. I know he had to put that in the letter, but my goodness, would I try to reword that in a more friendly way, even though it's hard because it's numbers. To not say, hey, the fund you invested in 2011 is down 8% over the past 10 years. If you just put your money in the S&P, you would be up 5x. 2/3 of the way through November, we were up nearly 11% as it seemed the biggest bubble in modern history was finally popping. Then stocks roared back, whipsawing our shorts badly. And here we are, yet another terrible month. Yet this is the biggest bubble in modern history, and we remain positioned for it to pop via a large S&P 500 short position and much smaller short positions in other companies, including Tesla. Here's why I called this the biggest bubble. Then he puts out these PE ratios. That said, we've only had one small redemption all year, and I sincerely hope that during my performance debacle, you've all made a lot of money on your long positions. Meanwhile, I continue to waive our management fee until I get you back above high water, something I did during a bad stretch several years ago before setting a new high mark at the end of 2022. So this guy's name is Stanfill Capital, and apparently he manages some large money, enough for Skrelly to tweet about him. Skrelly is pretty active in that fund manager world, so he knows a lot of these guys. And I was reading that letter last night, and I was like, my goodness, having to tell your investors that we almost made you money in November when everything seemed like it was going to pop, because that's how we're positioning to navigate the equity markets. And then the markets whipsawed back up, and we ended up going down on our short position. We didn't take profits when we thought it was going to pop because we thought it was going to pop. And so why would you take profits if the S&P is going to collapse another 15%? That didn't happen. The fund's down 8% over the past 15 years. And you're down 26% when the S&P 500 already had a 30% decline. How are you down 26% after the S&P fell 30% and then recovered? I mean, it's quite incredible the level of destruction you need to put towards the portfolio, or the level of positions you need to have to create that destruction in a market where, we were down a lot. I mean, if he was net short when the S&P fell 30%, he should have been up a lot and at least taken some of those profits, but he probably got greedy and thought the entire world was going to collapse at 4,800 back in April. And then the whipsaw probably ruined all the short positions. So it is quite incredible. But again, a lot of bears have that same narrative. Now, maybe that narrative is different in 2026, but so far the earnings growth and the catalyst for the earnings have not been, the best for a lot of these bears. Nvidia right there, 178. That continues to go green. He's the famous Tesla short. I don't know that much about this guy. I found out about him yesterday because Skrelly tweeted about it. I mean, this guy definitely said in his letter that he's once again short Tesla. But I guess some of the Tesla OGs might know this guy more than me. Stanfill Capital. He's got 44,000 followers. I was just reading that letter and I was like, dude, that is a tough letter to have to give to your investors. But again, a lot of those investors might want to put their money in a fund that is net short, right, and get some exposure to the bear side. So there is a reason why he has raised that capital. All right, let's get some coverage on the consumer and Black Friday. Here's some stats, and then we'll keep going from there.
% from last year. E-commerce sales, that's really where the strength is, up almost 10.5%. Is it as good as last year? Not necessarily, but it's still really strong. And if you look at some of the categories that saw growth, apparel sales, that's much needed category for growth, up 5.7%, and jewelry sales up almost 3%. Those stood out. It jives with what we got from Adobe, which showed even stronger growth. They always track the e-com sales, up 9% from last year to a record almost $12 billion spent online over the holiday weekend. And guys, just because my kids were here on, if you remember, before the holiday on Friday, and they said they each wanted jerseys. So Fanatics sent in some of their data from the weekend. They had a very strong holiday shopping season. Sales on the Fanatics app were up 285% on Black Friday from last year, and the highest that they've ever seen. So it's not just...
Again, is everyone doing this on credit cards or BNPL? Fanatics, Adobe, Salesforce, Shopify. These are record numbers for Black Friday. I mean, we'll get Amazon's data probably in a couple of days. They still have to calculate Cyber Monday, which is today. I mean, put in the chat if you bought anything on Black Friday or you spent any money. But my goodness, this is like not necessarily weak consumer behavior for all these analytics to be up triple digits year over year.
My kids, a lot of kids want jerseys. They had really strong performance, they said, in the NFL Lululemon collection, the NBA City Edition, Dodgers World Series champ merch, no surprise, and the NHL alternate jersey launches as well. So just some good color on one specific retailer, which saw really strong gains that I can relate to.
Certainly got ratified by at least last week's action in some of these retail names, Mike.
Yes, they did respond to the pullback that we got, right, over the first 3 months of November. Definitely a growth scare. I think we rebuilt a little bit of confidence in that part of the economy with affirmation. We're probably going to get a rate cut. And the industry's been so good at funneling retail activity into this handful of days. I always want to make sure the numbers kind of, you look at it over a broad broader window, it's coincident, right? I mean, people have jobs for the most part. It's less than 4.5% unemployment, and we're kind of growing retail sales close to nominal GDP growth. I don't think that's a bad thing, but I also don't think it's a matter of the consumer to the rescue. It's much more just sort of pushes against the idea that there's, there's sort of a real stress on the consumer more broadly.
Well, that's a big deal. Maybe the consumer is not coming to the rescue, but if there isn't as much real stress on the consumer as we all thought, there's another chart right here. Holiday e-commerce has tripled over the past decade, 11.8 billion on Black Friday. It really does make you think twice about what's going on with the consumer. Not saying the consumer's not struggling, not saying that the labor market is not amazing, but I mean, this type of spending, I did not expect that. Given all the bearish stuff I've just not heard, I did not expect this type of spending because, again, if people don't have the money or the disposable income, they're not going to spend. And you're seeing pretty much the opposite on this one. Here is RBC's analyst about what she thinks is going on with the consumer as well.
Of our forecast, our target on a 12-month forward basis is 77.50 for about a 14% gain versus that Wednesday close before Thanksgiving. We do think that you've got some short-term stuff to work through. Maybe the 5.1% decline that we already did was enough. Maybe there's still a little bit more to wrangle out. We have a whole long list of things we're watching at. But to be honest, Mike, I'm trying to get away from sort of this year-end, this is exactly what's going to happen over the next few weeks, and really starting to turn our attention to a longer-term time frame.
So that longer-term 12-month time frame, it probably would be logical to say, look, the market is at least fully valued. Even though people have said that they're a little bit concerned, equity exposures are pretty high. We sort of know what the immediate Fed path is, but we're not quite sure beyond that. So what are the elements that feed into a pretty aggressive 14% upside target?
So we have 5 different models that we use, and the 7750 is basically really close to the median and the average. We're kind of looking at both of those stats. The most constructive one gets us all the way up to 8,000. That's some valuation and earnings work we've done. The least constructive is our economic test, looking at GDP that doesn't quite manage to cross the 2% year-over-year threshold at the end of next year. That's more like a 5 to 6% type gain. That's the least constructive. Now, the other 3 models, it's really funny. They come out to 13, 14, and 15% returns.
Yeah.
One of those is looking at the Fed. And when you see the Fed cutting, but they're not cutting too much, that's actually good news. Stock market tends to be up, about 13% if they're doing 100 basis points or less in a 12-month time frame. If you look at our sentiment model, now AAII was really interesting. So I was working on Friday. I know most of you guys were as well.
Yep.
But we actually saw the latest update from that sentiment indicator, and the 4-week average dropped down into the sweet spot. It's now between -1 and -2 standard deviations below the long-term average. And typically, it can go lower. Frankly, it may go lower, but on a 12-month forward time frame, you're typically up in the stock market about 15%. Our earnings yield gap model is the 14% that looks at stocks versus bonds. That the comparison of the earnings yield versus the 10-year yield, they're very close, but it's enough to get you kind of about a 14% return historically.
Does it concern you at all to apply that level of precision to the AAII survey? I only say that because other measures are not quite as negative, and it's a few hundred people. It's kind of like an opt-in poll, and we had the same kind of gains in 2024 when it was really net bullish the whole year, as we've had this year when it was mostly skeptical.
So, it's been a really good indicator over time. We've got a really long duration in terms of the time series, but we don't believe in looking at only one thing, right? I've never been what I call sort of the magic model strategist where, hey, here we're putting this in and it's just this one thing we look at. We want to look at the preponderance of the evidence. Frankly, that's why we also pay attention to the medians when we're doing, sort of the analysis of the different models.
Yeah.
It is fascinating, though, because AAII also tracks the actual allocations, and those are up here, and the sentiment is down here. So there is a little bit of a disconnect.
Sure.
What about Bitcoin?
Bitcoin, so it's not something we're really looking so much in terms of this 12-month forward forecast, but last week on Monday, we actually made a long list of all the things we're watching to kind of gauge this current period of more near-term stress. Bitcoin's at the top of the list. I mean, there are a few other things as well. Breadth has been declining, but if you look over the past few years, Bitcoin and S&P 500 have been correlated.
But Bitcoin as a leader?
It's been more coincident. And so the fact that we've seen Bitcoin stumbling, frankly, it's been a little bit patchy since the summer. We've kept thinking that this was going to portend a bit of a drawdown, of sort of the risk trade, frankly. We got 5.1%. I wish it had been more. I'd feel, a lot better about the froth being out in the short term. But we woke up to these headlines this morning, and it's, telling us maybe there's a little bit more to go than the 5.1%, or maybe we retest some of those lows, but that's a short-term issue.
We keep getting.
All right, so crypto continues to get hit right here. That's hurting Robinhood as well, as we're down about 5.59%. Bitcoin right there, 85,431. Bitcoin tried to make a move closer to 87. Then it got rejected. Same thing with Ethereum as it tried to break 2850. Wow, 2780. There you go. There's your break below 2800. As that one continues to go down. MicroStrategy just destroyed, 9% down. So I tax loss harvested and Misty last week. So I'm officially out of Misty. It's 500 shares, not a massive position. I know there's other people that have a relatively large position as they're using it for income. Unfortunately, Bitcoin didn't work out this year. I mean, you got 1 month left, maybe that changes, but Bitcoin has now been net negative for the year. Bonds have done better than Bitcoin. And unfortunately, S&P right there going red as well, 679. Unfortunately, Misty and MicroStrategy is all contingent on Bitcoin. Now, again, Saylor did announce that 1.4 billion reserve today of USD. So, maybe that signals that a lot of the people that are selling off MicroStrategy because they're afraid they're going to be a distressed asset, they should have enough money to pay off their interest for the foreseeable future on the preferred equities. But the name of the game is not if Saylor is going to be able to pay off his debt. It's more so if Bitcoin can start moving. Until it does, these questions are going to continue to linger. And the options market for MicroStrategy, which is part of its appeal, is going to get less lucrative the more it falls. So less money ultimately is going to be coming into the ecosystem. Okay, the JP Morgan thing on the JP Morgan thing over the weekend, I think is the dumbest thing I've ever heard. I'm sorry. But the argument is JP Morgan is short MicroStrategy. And if MicroStrategy were to go up by 50%, JP Morgan, an $850 billion company, 16 times bigger than MicroStrategy, would go bankrupt. I think the people propagating this rumor on Twitter have gotten to the point of cope. And trust me, I've been there before. I know what it feels like to cope on something that's not working. But MicroStrategy is not down because JP Morgan has a conspiracy theory to put Saylor out of business because they're short position, which, by the way, MicroStrategy is only shorted 10% in its entirety. It's not like JP Morgan is short the entire 10%. Even if they were, that would not be enough to blow up the entire financial institution that is JP Morgan Chase if MicroStrategy ended up going to $325 a share. So, yeah, I really think that the people pushing this narrative are desperate for and the reason that you might be, well, why are they pushing this narrative? The reason they're pushing this narrative is because they're trying to have like a GameStop moment. They're trying to get all the bulls to come together and be like, we hate Jamie Dimon and we're going to stick it to the man and we're going to buy MSTR stock. And it's not working. And the reason it's not working has nothing to do with JP Morgan. It's because Bitcoin, unfortunately, has not played out. So, yeah, I mean, MicroStrategy was good when Bitcoin was going up. Unfortunately, Bitcoin's not going up, so MicroStrategy is bad. I think it's that simple. I don't think it has to get that much more complicated. Like, it's a leverage same thing with BMR. It's a leverage against Ethereum. If those assets that the digital asset treasury is leveraged against don't work, the DAT is not going to work either. So Robinhood also has crypto exposure. Robinhood is just more of a diversified business. Coinbase also is less diversified than Robinhood, but they do more than just buy Bitcoin on the balance sheet. And so they're not getting hit as bad as MSTR, but I don't think it's because of JP Morgan. JPM, by the way, that stock has been a great stock this year, down 0.5% on the day. Goldman Sachs as well, up a lot this year. Yeah, JP Morgan, 30%. I mean, JP Morgan's outperforming Nvidia, which is quite incredible this year. Okay, let's see what else we've got going on in terms of headlines. You had someone buy 3.4 million in Tesla calls for December 26th. 440 is the strike. So you got 4 million of calls just came in, or 3.5 million on Tessie. Tesla right there, 428.35%. Again, Elon did do an interview over the weekend, had a lot of different quotes. One of the big quotes was that he is very bullish on Google and Nvidia. He was asked, like, what stocks would you buy? And he didn't say I would buy them, but he basically said that, if one were to invest in AI, Google and Nvidia are no-brainers to him. And then this is what he had to say about the convergence between SpaceX, Tesla, and xAI, which I know a lot of people have been wondering how these three come together.
Well, I think that there's increasingly a convergence actually between SpaceX and Tesla and xAI. In that if the future is solar-powered AI satellites, which it pretty much needs to be in order to in order to harness a non-trivial amount of the energy of the sun, you have to move to solar-powered AI satellites in deep space, which somewhat is a confluence of Tesla expertise and SpaceX expertise, and xAI on the AI front. So it just feels like over time there's somewhat of a convergence there. But all the companies are doing great things. Very proud of the teams. They do great work. So we're making great progress with Tesla on the autonomous driving. I don't know if you've tried the self-driving.
The guy ended up saying, I've tried it in a Waymo, not not in a Tesla. I was like, bro, you're interviewing Elon Musk. Like, maybe you should have tried FSD before. But look, I think that's why Elon's getting a lot of people excited. I mean, one of the ways to justify this $1 trillion Tesla package is by converging the companies you're working on, even if they're not explicitly owned by Tesla, to one day be working with Tesla. And that's probably why the xAI ownership stake fund Tesla is also going to go through over the next few years, and that's something that I think shareholders are going to be very excited for as well. But one thing that Burry said also in the Substack about Tesla is that he thinks the pay package is ridiculous for Elon. Again, $1 trillion sounds ridiculous on paper, but if he's talking about satellites in space and data centers in space and SpaceX converging with the xAI models to work with what's going on with Tesla, there is a real world where you could easily justify how that is worth $1 trillion if the overall company is worth a lot more than just $1 trillion. So it's something we're gonna have to see play out in the next couple of years. One thing that might play out in the next couple of months, maybe the next couple of weeks, is OpenAI introducing advertising. So this went viral over the weekend. ChatGPT's Android app latest beta includes new references to an ads feature and a search ads carousel. It looks like advertising is coming to ChatGPT. Here's a video that Austin posted over the weekend with how Sam Altman has talked about ads historically.
ChatGPT would consistently be reported as like a user's most trusted technology product from a big tech company. We don't really think of ourselves as a big tech company, but I guess we sort of are now. And that's very odd on the surface, right? Because AI is the thing that hallucinates. AI is the thing with all the errors. And this was when that was a much more of a problem. And there is a question of why. Ads on a Google search are dependent on Google doing badly. Like if it was giving you the best answer, there'd be no reason ever to buy an ad above it. So you kind of you're like, that thing is not quite aligned with me. ChatGPT, maybe it gives you the best answer, maybe it doesn't, but you're paying it, or hopefully y'all are paying it, and it's at least trying to give you the best answer. And that has led to people having like a deep and pretty trusting relationship with ChatGPT. You ask ChatGPT for the best hotel, not Google or something else. If ChatGPT were accepting payment to put a worse hotel above a better hotel, that's probably catastrophic for your relationship with ChatGPT. On the other hand, if ChatGPT shows you it's guessed the best hotel, whatever that is, and then if you book it with one click, takes the same cut that it would take from any other hotel, and there's nothing that influenced it, but there's some sort of transaction fee, I think that's probably okay.
Well, he's going to have to figure out how to incorporate advertising in a meaningful way because now he's getting into the game, or at least OpenAI is getting into the game. And by the way, they kind of have to get into this game. Google right here at 316. I mean, how else will they make money in the short term until they develop a business model that is not just contingent on $20 a month or $200 a month subscriptions? They're going to need ads. That's why Google and Meta have some of the best business models on the planet. It's I mean, there's we were talking about this a couple months ago, but there's not a ton of ways to make money. Like there's a ton of examples on how to make money, but there's not that many business models that are out there. The main three are: you pay for a product or service, the company gives you it, you give them money. You lend people money, people pay you interest on that money, or you advertise in order to get people to know about the product or service. I mean, a lot of business models revolve around those three major concepts. You sell a product or service for a fee, you advertise a product or service for a fee, or you lend for a fee. And so I'm sure there's more creative models around business that will allow AI to be monetized. I know OpenAI has talked a lot about rev sharing with drug companies, for example. They do the research, they get upside of the drug, but that's not immediate revenue. Immediate revenue is ads. And ads should theoretically be what carries a decent chunk of the growth over the next couple of years, but they're going to have to do it in a way that's non-intrusive. And one of the things I like about the LLMs is they're never trying to sell me anything. Whenever I ask a question, I know that I'm getting a real response. MicroStrategy now down 11% that I can engage with. Unfortunately, if the ads come in, I think it might potentially weaken the trust. Now, granted, if you can put the ads in a meaningful way, maybe it helps me. You know, this is where Google has an edge. They've been doing ads for 20 years, and Gemini, I would imagine, can make the ads integrated in a way that doesn't feel weird. But ChatGPT is going to have to figure it out for this to make a lot of sense. S&P right there, 679. Robinhood down today actually doesn't surprise me at all. The reason Hood pumped last week was because of that prediction markets news. I mean, look, I liked it, but I mean, it was just a piece of news on Robinhood's future endeavors that pumped it 11%. And like, did it deserve a move? Yeah, I was shocked by 11%. I did not expect it made Thanksgiving a lot better, knowing Hood pumped by. But I mean, it makes sense why it's reversing. Like, the prediction markets news is bullish, but like, it's not something that's going to immediately change the company tomorrow. They're still splitting the fee with Kalshi, so it's not doubling the revenues by getting rid of the Kalshi fee. And then you have Bitcoin goes from 91 to 85. I mean, like, unfortunately, that's going to end up affecting something like a Hood. Same thing with a Coinbase. That's also down 7%. The real question is, why are people selling Bitcoin? 84,000, bro. It was just at 86. I think while we played the Sam Altman video, it dropped $2,000. Can people like stop selling this thing? Like, can we not, like, can we just like, can people just hold on to it? Like, why are they selling? Like, just hold it. Just stop. Like, can Saylor tell everyone to stop? He keeps tweeting all these AI pictures of him holding these random objects, which I love, but can you just tell people to stop selling? Because that would be nice. Yeah, Bitcoin was up 12% last week. That's fair. So maybe it's just reversing. Tax loss harvesting. Well, it is that month where I guess people start to do it. I don't know. That is weird. But silver and gold at the same time making a move right here. Silver 52.22 or silver 57. SLV, the BlackRock silver ETF, that's up 2%. The only update on Grab over the past couple of days, this one came out this morning, is that they're replacing one of their board directors. One of their board directors is stepping down. And I haven't looked at the new person who's on the board. I don't know too much about them outside of the fact that they were the vice president of Madison Square Garden Entertainment Corporation, which I thought was pretty interesting to have someone like that join the team. So I think the big story for Grab, again, is that they are probably going to be acquiring GoTo, based on the story. If anyone's been following it over the past couple of weeks, GoTo CEO got ousted by SoftBank. New CEO is likely going to allow the acquisition to go through. Governments want the acquisition to go through, especially the Indonesian government. And that is where I think you get a material re-rating on the company's growth trajectory going into 2026. Unfortunately, the market took a really big dump in November, and a lot of stocks have not recovered. And, you know, if Nvidia is not recovering its dump, it's going to be hard for a Rocket Lab, for a Grab, for an ASTS to meaningfully recover. And so I think a lot of those names are just getting hit. Nvidia right there up 1.3%, 179. That's getting a little spike as Bitcoin goes down, which is weird. Looking at the Japanese 2-year, that's also spiking a little bit right now. Maybe that's why Bitcoin fell to 84,000. The 10-year Japanese bond again spiked to its highest level, 1.84% since 2008. That was one of the reasons I think Bitcoin got hit last night. Again, you might have a lot of people that are just short Japan, long Bitcoin, and if that trade reverses, they've got to sell their Bitcoin to cover the Japanese short. So that could be one of the issues. GameStop's up a little bit. Opendoor's down 5%. Broadcom down 2%. Rocket Lab down 3.4%. S&P 500 back to 679.83. If it is Japan, then I don't know. If it is Japan, I don't know what the solution is. You know, Trump called the Japanese prime minister over the week and said to stop talking shit about Taiwan, because this new lady who's the prime minister of Japan, China's delegates came and she openly told them don't mess with Taiwan, and then China got pretty pissed off that she said that, and then apparently, according to Politico, Trump called her last week and said, "Don't do that shit. Don't do that shit." It was like, don't say that shit. And maybe that'll calm down some of the fears. But like again, that once again goes to this argument around Japan. It's just like, what is happening? Well, they're printing, they're speaking a little spicy, and their bond deals are not cooperating, which potentially could be creating issues for the equity markets. Yeah, Trump and Venezuela. So the update on that is that Trump will be meeting. Okay, so I don't know if this is going to be live, but yeah, this is probably not going to be live. But he's going to be meeting with the cabinet, including Secretary of State and Pete Hegseth, to discuss Venezuela at 5 p.m. Eastern at the Oval Office today. Maybe they're going to do a stream after they have the discussion and like kind of answer questions. But honestly, dude, I still have not deeply looked at the Venezuela situation. Like, I did not spend time over the weekend analyzing it. I did know that Trump tweeted that the airspace above Venezuela was now closed, or, well, he's basically saying don't fly above it. This is the tweet. To all airlines, pilots, drug dealers, and human traffickers, please consider the airspace above and surrounding Venezuela to be closed in its entirety. Tweet that on the 29th. Yes, there is an argument that it is deeply integrated into oil prices, and if we do get into some crazy war with Venezuela, that could spike oil prices aggressively. Crude's still been pretty damn good, below 60. I mean, you can't ask for a better price on oil. This entire year, it's been stuck below 60 or barely above 60. So, and that's helped with keeping gas prices down. Trump would like it to stay that way because he wants oil prices to continue staying low, but I think the Venezuela conflict, if it does turn into a legitimate conflict, is something that we definitely have to keep our eyes on. All right, let's go to the heat map right here. That one's down. Where's Duolingo today? Duolingo had a good day on Wednesday, one of its best days. Duolingo down 1%. Well, it's not doing as bad as some of these other stocks. Here's the heat map. We're pretty red on the day. Nvidia is one of the only tech names that's green. Synopsys was up 7. Now it's up 3. Walmart actually holding on. Walmart's had a pretty good run over the past couple of days as well. Walmart year to date is up 23% after a massive 2024, which is good to see. And then stock draft, let's pull that up as well. Again, I do not actually own Nvidia. It is, or not Nvidia, Duolingo. It's just in my stock draft. We are still up 26%, still in first place, even with a 60% decline on Duolingo. Matt's up 18, Chris is up 7, Tanner's up 16, and then Steve is up 2. By the way, for those asking about the dinner with Triple V and Steve over the weekend, it was great. We did it on Wednesday. I got to show you guys this. You guys are gonna be proud of me, dude. You guys are gonna be real proud of me. This is the steak that I ate. Look at this, bro. Just look. Can you believe that me, out of all people, ate that steak? And I loved it. I freaking loved it, dude. It was not, look at that, dude. That is, I mean, they brought it on the table, and because they kind of ordered for the entire table, so like we didn't individually order. And Triple V was awesome. It was great connecting with him. Derek was there. It was great connecting him. Steve got to meet everybody. My sister, my cousin came, so they got to meet these guys. So it was a great time, and it was just really fun to connect with everybody and talk about the markets and all that stuff. But then they brought in these porterhouses, and yeah, as you guys are saying, it looked like it's alive. It did. And I said, you know what? Screw it. I'm just going to close my eyes and eat it. And I can't say I didn't enjoy it. I ate a lot of steak. Like I ate my sister couldn't touch it. My sister could like the pink was freaking her out. My cousin tried to eat around the edges. She ate a little bit of it. She was just like, it's too pink. I mean, you could have seared it on the plate as well, but like, and they seared it a little bit, but I just straight up ate it and I didn't care. So I don't know, maybe your boy is, that's not even medium rare. That's like a little bit below medium rare. That's intense. And I said, I don't care. I'm eating it. Steve loved it. That's how Steve eats a steak. Steve legit eats a steak fiery pink in the center. And I feel like I became a man, dude. I feel like I became a man. So now, obviously, do I prefer that? No, I like it a bit more cooked, but I really like, you can ask anyone who was there, dude. I ate like almost 8-9 pieces from that porterhouse. I was not scared to eat the steak. So that's how you're supposed to eat it. Yeah, I guess that's how you're supposed to eat it, but it was definitely a new experience for me. But overall, it was good, and dinner itself was super fun. So I was very, very happy that we ended up doing it. Okay, let's see what other headlines do we have. Bank of America, we talked about that rate cut probability. That's continuing. Wow, Bitcoin below 84. My goodness, who is taking this down today? 83. It did get to 80 a couple of weeks ago. It was for like a split second, and then it recovered. So I guess the market wants us to test some lows again. Is anyone here selling the crypto? Just be honest. Did anyone like just say, you know what? I'm up on my Bitcoin. I need to secure some gains, or maybe I'm down, but I don't feel like being stuck in it anymore. Did you have to sell for like bills you have to pay or something? Like, put in the chat if you took some profits on this. Obviously, to move the prices aggressively, it's not just retail. There's got to be something deeper here. By the way, I was reading this stat from Bloomberg. It's kind of crazy, but for every, let me pull up the exact stat. For every 1 billion pulled from Bitcoin, from the Bitcoin ETFs, that's a 3.5% drop in Bitcoin's price. It's kind of crazy. And you have seen a lot of the outflows on those ETFs coming. So, I think we just have a little bit more bearish sentiment around Bitcoin. Did you watch Andre's video on it? Yes, I actually did watch Andre's video. So Andre's video actually has a really interesting point from a technical analysis perspective, and you can either hate technical analysis or love TA. But his argument was that like there's a specific amount of days for Bitcoin to go up and down, and as a result, you have 365 days until the next peak. So let me just play a clip from that video right here that I thought was also really interesting. He's looking at the historical patterns on how Bitcoin is sold off.
1,050 days for this cycle. But what's also very interesting is that the last cycles 3 and 4, also took the exact same amount, 1,050-ish days. Now, check this out. I know it looks complicated, but this chart shows kind of the same thing. Bitcoin's followed the same pattern, but alternating from the all-time low to the all-time high, and then all-time high to the all-time low. So for example, in 2015, from the all-time low to the all-time high, it took Bitcoin 1,050-ish days. And then in 2017, from the all-time high to the all-time low, it took Bitcoin about a year, 364 days. Then in 2018, from the all-time low to the all-time high, it took again 1,050-ish days. And again, from the all-time high in 2021 to the all-time low, it took 364 days. Well, guess how long it took us to go from the all-time low to the all-time high in this cycle? 1,050 to 1,064-ish days. Which means if this pattern continues, we should reach the all-time low 364 days from our all-time high, which happened on October 6th of this year. That means we are on around October 5th, 2026, when Bitcoin could reach the all-time low of this cycle?
I mean, hate it or love it, it's a pretty simple explanation. You don't have to agree with it, but like a third grader could understand that explanation. He's just looking at the previous cycles from now, or from lows to highs, and then from highs to lows, and literally just copying those numbers. Now, I think the entire thesis for a lot of the crypto bulls is that that entire concept of a cycle should be broken, because in the previous cycles, which coincidentally just have all the days line up the way they do, which I don't know if you want to call it irony or fate, or it is kind of weird that they line up the way they do. But the ETFs and the level of buying from a JP Morgan, a Goldman Sachs, the institutionalization of the products, that makes this time different. That is the argument from people who are incredibly bullish against the 4-year cycle. I mean, quite frankly, Tom Lee has said the 4-year cycle is broken, and he has his own data to kind of make sense of that. If it's not broken, which I don't know, dude, I really don't know. Like I think it's not broken, because like logically it makes sense. Why would the cycle exist when you have so many new players in the space that are market participants that have different incentives? But then again, why did the cycle even exist in the first place? And I know it has to do with the halving, but I mean, I don't know. There's a lot of nuance now into how people are thinking of this. Maybe some of the OGs are selling simply because they deeply believe in that cycle, and as a result, they enter in at a different time. But if that's the case, then October 2026 is when we see another decline. And if that's the case, then maybe that'll be when we see, or sorry, that's when we see the next all-time low. And if that's the case, then we got a year of pain to wait. It would be kind of crazy if that's what, if he's right about how the cycle lines up and it actually comes down that way, it would be incredible. Tanner says a pattern with 2 hits, big data. Yeah, but I don't know if you can just fully dismiss the 2 hits, given Bitcoin's only been around since 2010, right? Like the 2 hits line up pretty closely. I mean, the fact that it's 1,050 days every time, and then 364 days every time for the lows to the highs, like I get it. Maybe it's just coincidence. And I'm by no means an expert on the cyclicality of Bitcoin, but it is interesting to say the least. And if we do end up going down October 2026, now the scary part about this is if it does end up going down and bottoming in 2026 October, is that a signal for the entire market to be down? Because last time this happened in 2022, it was a bear market, and Bitcoin led that bear market to the downside. I think it bottomed at like 15,000. It's hard for me to believe that, given the S&P 500 earnings growth, given the rate cutting cycle. The rate cutting cycle, by the way, should be bullish for Bitcoin in 2026, regardless of this cyclical analysis that Andre presented. So I don't know. I think over the next year, we're going to have to see really how this ends up playing out. I'll send it. Yeah, I'll send the link right here. Tanner, Tanner, you must have hated this analysis. He's typing in caps in the chat. He says it didn't even hit the all-time highs when Andre was sharing it. Well, if he's off by a day or two, I don't think that's necessarily invalidating what he showed. And I don't think he's wrong about the 2025 all-time high. I mean, he's like, yeah, maybe he's off by like a day or maybe even a week, but at its core, I don't. November 2021 is what I see on his chart, and then August 2025 is what I see on his chart right there. So I don't know, dude. Maybe he's wrong, maybe he's right, but the institutionalization of crypto is, I think, what's changing more. It was a mere approximation. He was quoting charts off someone else who's at. Yeah, he was quoting someone else's. This is not even Andre's thesis. He was just showing someone else's thesis as well. Robinhood right there, 120.85. That's down 6%. Ethereum 27.50, and then Reddit 220.96. That's up 2%. Tanner says, give him a call, dude. Tanner is the biggest Bitcoin bull that I didn't know existed. This guy is freaking saying he needs to call into the show to talk about that. All right, Tanner, I'm calling you right here. When did you love Bitcoin so much?
It's not that I love Bitcoin as much as I just find TA so confusing. Doesn't make any sense to me.
Okay, so what is your issue with Andre's? I don't know if you want to call it TA. It was more. I don't think it was TA. It was more like, I don't know, just analysis on the number of days from highs to lows, right?
I mean, I don't know what TA means, but I wouldn't call this fundamental analysis.
I would agree. I would agree.
Okay, so look at the first hit in 2017, 28, or in the 2018 era. He said the all-time high was hit, and then put this bar. That's like at the bottom. It doesn't even. That's not where it hit the all-time high.
When, I mean, when.
Go ahead.
Okay, so your beef is that it's like a little off, because the all-time high was definitely hit around that time frame.
Yeah, around that time frame. What he's saying is it's so coincidental that they're all 364 days. If he's playing in these perfect time frames, he's off by like a legit month. Like the line should be pushed. Like it wouldn't look that coincidental if he actually had lined it up to the 2018 high. Yeah, right there where you had the red bar. He said that's the drawdown.
Right.
That's not, well, I mean, it is the drawdown, but it's also the run up as well. It's the whole cycle, right where you have it, right there. That's the whole cycle.
But isn't that his point? Is that from the top to the bottom? Like, because he's using the same in 2021 where it's green right there. He's using the same thing.
What does that even mean? If he's not calling, if he's not saying that the run up takes 1,050 days and then the drawdown takes 364 days, what is he even saying? Somewhere in the next 364 days, it can run up another 100% and also find a bottom. Is that what he's saying? That there's no information to take away from that.
Well, I think he's saying, so I think your point is that the 1,054 days is also including the 364 days. That overlap is what you're annoyed by. And I think that's a fair point, because he's saying we peaked in August, and so we peaked October 6th, and now we're starting the 364-day decline. That's how he gets October 4th for next year. But your point is that in the past cycles, he's been off by a couple months. But even if he's off by a couple months, maybe the bottom is then September 26 or August 26. But it would still be in the same time frame, right?
Yeah, I know, but what it could also mean is that we run up an additional 100% in that 364 days.
But I don't think that happened in the past two cycles.
Go look at it.
Like being off a couple. No. So the 2018 one, it's not right before it took off. I remember 2017 when it's like, from what I'm looking at on the picture, it looks like it's blended within it. I see your point though. I get why you're saying it's not the best description of it. Yeah, I mean, look, okay, so maybe there is a run up coming up.
Love Andre Jick. I've got nothing against this. I just I find people just look to the stars and they go, oh, everyone now, you guys are okay to sell your Bitcoin because it's guaranteed in the stars that we're going to run down from here all the way to new all-time lows. Or at least.
I agree. That's stupid.
Good luck with that.
Yeah.
But yeah, I don't know. Anyway,
well, let me just ask you this. Let me ask you this thing, then I'll let you leave. Do you think the institutionalization of Bitcoin makes the cycle different? Like, do you think it breaks the cycle, or no?
I have a hard time knowing where Bitcoin is going to go. I've got a much bigger belief in Ethereum right now, and I don't think that there's a 4-year cycle on Ethereum. It doesn't make sense. There's no halving. I do think that the halving events does cause a cycle on Bitcoin. I mean, there's real reason for me to believe that. But the institutionalization of it, I don't know. I just think maybe it's more buyers and actually just makes the market larger. Like every cycle, we're adding on essentially another $1 trillion of market cap. Before it was individuals, then companies, then governments, and potentially central banks one day. But I don't know if that changes the cycle. It just, allows us to hit sort of higher highs. I'm a believer in Bitcoin. I'm a believer in the companies that bet on Bitcoin, or benefit from Bitcoin. So Coinbase or Robinhood or these sort of names. And by the way, I'd be much more worried about our hood positions if we're going to head back down to all-time lows.
I agree. That's what I'm saying. I don't want Andre to be right about this. I just thought it was interesting. It's funny how 50% of the people agree with you, 50% disagree. It's quite incredible how polarized people are on the cyclical nature of this. I agree with you, though. I don't think Ethereum should have a cycle. However, I also don't think Ethereum just blows back to 4,500 if Bitcoin doesn't cooperate, because I think they are intertwined. Same thing with Solana, XRP, et cetera. So I guess we're going to see over the coming years.
Yeah, man. But interesting things. I'm still very bullish on this market. I'm a better on AI and finance in general, and blockchain's a big part of that. Advertising. Dude, we need to have a conversation about Reddit if you're deep diving on Reddit, because I'm loving that name right now. I'm loving Meta. I think a lot of these names are really interesting.
I'm deep diving into it. I don't love Reddit's valuation, but the growth is pulling me towards being more bullish. But yes, we should definitely talk about it.
Yeah, but you've been able to stomach some valuations in your time, so maybe you can get through it.
That's true.
All right, man.
All right. Thank you, Tanner. Tanner's Twitter in the chat. Talk later.
Bye.
I actually am starting to like Reddit, but I don't know, dude. I don't know if you pay that much of a premium for Reddit's growth. But then again, they are the fastest advertising growth name in the entire, well, outside of AppLovin. AppLovin's faster than them. But yeah, that deep dive on Reddit probably will be out on Saturday, as I've been looking more into them. Amcor right there, 3704. That's up 1.7. Oracle's back above 200. AMD goes green, and Nvidia's green. S&P, are we back at 680? We are back at 681. All right, so crypto lagging, not hurting the S&P. The S&P is barely down, even though Bitcoin's down a lot more. So maybe the markets are diverging a little bit away from crypto as the core indicator. That's what it felt like in the pre-markets. And then you've got big tech starting to go green. Meta continuing its momentum from last week. It's basically at 600 most of last week, and then it bounced up on Tuesday and Wednesday. And now you're here at 645 on Meta. Yeah, ASML, definitely another big one to do some research in. Reddit could be in the S&P 500. That is also true. They have a potential date with the S&P. Same with SoFi. Oh, we're going to get that announcement this Friday. Okay, so December 5th, we're going to know this Friday who gets in. I mean, it would be kind of crazy if SoFi and Reddit got in. That would be a hell of a way to end the year. Where is SoFi? We got 1 month left for SoFi to get that $30 close. And then it's got about 3 months to get above 45 for Noto to get paid. The rate cut is incredibly bullish for SoFi. I do think that a $30 close is not crazy. Oklo down 2% on the day. Nvidia still 179. But we're going to have to see how it closes by the end of this month. These are really the last 31 days. That's it. There's only like, 20 trading days? So we've got basically 20 to 22 days left for this market to give us its return for 2025. And, the sort of fund manager chasing thesis potentially goes into effect. The tax loss harvesting thesis for December goes into effect. I mean, there's a lot of different narratives that flow out. I was looking at some data last night. On average, December is up about 1.2 to 1.5%, 75% of the time. So maybe we are part of that 75%. And if we are, you need 2.5% to get 7,000, but maybe that ends up playing out towards the end of the year. It would not surprise me if Nvidia gaps up to 200 by end of year either, and people are just like, this is too cheap. But you can tell Jensen was annoyed today as well at having to constantly explain why Nvidia is real. And so there might be some more pain from a narrative perspective to get there. And then we enter 2026. And we're going to have to see how 2026 plays out. Chime is up today as well. Tanner did pitch this on the show we had on Wednesday for Equity Edge. It was an audio show on Twitter. And he did pitch Chime. Chime right there up 7.19% as that goes green. Coinbase still down 5%, Reddit up 2%, and then S&P making a move right here, $1 away. Potentially green on the day. TTD is green as well. That's correct. Munya, thank you for the super chat. Thoughts on Strategy CEO saying they might sell Bitcoin if MNAV falls below 1, kind of contradicts his chairman, Saylor, and might scare creditors. So they put out a 22-minute video today. And I think that's where you're getting the quote from the Strategy CEO saying they might sell Bitcoin. I think they legally have to say that. I mean, I think there's a world in which they could, but legally they have to disclose that this is a risk to our Bitcoin holdings, which is that we might need to sell it in order to do something else. Now, ultimately, I think Saylor makes the final call on if they sell or not, or don't. And based on what Saylor has historically said, I doubt they would sell unless it gets that bad. And I mean, I don't know. Saylor said Bitcoin could go to a freaking dollar and he wouldn't sell it. So, maybe he's just saying that, or maybe he really has done some financial engineering based on how the preferred equities were divided and how they were distributed for him to never have to really sell it. MicroStrategy down 10.85%. And so if that's the case, they probably just had to say it in that video. U.S. Atlanta Fed GDP for Q3. Did we just get that? They didn't give it last week. Is that right? Are we at 3.9%? Yeah, 3.9. That's the estimate. So that's not the official GDP reading. We were supposed to get that a couple weeks ago, but this is the estimate. Atlanta Fed now projecting 3.9. Look, if we end up holding on to 4% for the next, you guys know Japan grew GDP by 5% for 15 years from the 60s to 70s. Like, because of this whole yen carry trade stuff, I've been looking a lot more into Japan's history, and my goodness, if it was built, if it was manufactured in the 60s, 70s, and 80s, it came from Japan. Japan at one point was close to overtaking the United States in GDP, and that's when you had the United States president, the France president, the UK president. You had a lot of the Western allies come together, and they basically told Japan, the yen was 250 to 1 against the dollar. Right now it's at like 140, 150-ish. They basically started artificially deflating the yen against the dollar because, one of their biggest allies was like, hey, dude, we cannot have this yen as high as it is. And ironically, that's what ended up starting the lost decade for Japan, where everything just fell apart. But man, did they compound their GDP growth back in the day. And so if the United States, at the level that we are, can get anywhere near 4% for the next few years, which is asking a lot, it would be very exciting. Very, very exciting if we can get there. Amcor continuing to get a good bid right there, 37.20. That's up 2.2%. Again, very tied to Broadcom, still trading at a pretty reasonable multiple as well, a little bit over one-time sales. So that to me is a long for 2026. Nokia 613, that's up a little bit on the day. Bitcoin still 84.2. Duolingo 190. Silver continuing to go higher. Bitmine not low of the day, but pretty close at 29.25. Lows at 28. As Ethereum tries to hold on to 2,700, but Ethereum pretty close to the low of day as well at 27.19. Did we get below 2,700? Yeah, we got to 26.25 on November 21st. Which was an ugly day for everybody. So hopefully we stay above those levels. Nvidia, are we going red? Well, we're down from 180. Okay, so I think the next catalyst now for this market, because we've kind of run out of a lot of catalysts given earnings are done, is the Fed meeting. And I wonder how much activity or how much the trend really changes until we get that decision, although everyone probably is going to start to price in the decision. Again, S&P really not that far off from all-time highs. So although the high beta stocks have taken a hit, it's not like the S&P 500 has really been destroyed. Even if it was at 670, that would still be 2% off from all-time highs. Now it's less than 1%. So the question is, can we just hold on to these levels? I think that's what we're gonna have to see over the coming weeks until we get the rate cut catalyst. On top of that, you have again, Powell speaking at 8 p.m. today at Stanford. I don't think he's going to say anything too crazy for the markets. Also, Japan is announcing a rate cut decision tonight, right? I'm pretty sure it's tonight. It is on... No, sorry. It's December 19th. Okay, so that's likely going to be a hike. It's like 85% probabilities that's a hike. Which, again, I got to study more about Japanese monetary policy, but I just logically, I don't understand why they're printing $150 billion and then hiking rates at the same time. Like, and this is a trend with Japan, dude. Again, I've been on this whole Japanese binge, but in the 90s, they did the same shit. They would like do something that's like stimulative, and then they would introduce new taxes and hike rates. And until they finally stepped in around the dot-com bubble and started lowering rates, it was just like, what was the point of raising rates? And I think they're trying to find a balance between stimulus and inflation. And realistically, now here's a deeper conversation. This is the conversation no one wants to have on Japan. This is the conversation no one wants to have. Japan's actually struggling on a population crisis. Now, the conventional conversation is people in Japan aren't having that many kids. Sure, that's like the legit. People in America aren't having that many kids. The actual problem is Japan doesn't really want immigrants. In fact, the reason the old prime minister had to resign out of shame is because he wanted to bring in 500,000 Nigerians and Indians into Japan to be able to do a lot of the work that the working class of Japan isn't really doing, partly because of cultural shifts, but also partly because they're getting older. It's not easy for someone who's 75 years old to do manual labor. And then, you know, the Japanese population rejected that wholeheartedly. And I learned a lot about this when Amir came to visit, because Amir's wife is actually Japanese. He's moving to Japan from Sweden. So everything he's been saying lines up with the research that I've been doing. Like, the Japanese people do not want that many. It's not the melting pot that America is. And so literally the reason the prime minister resigned a month and a half ago is out of, and he was like, oh, he had to resign out of shame. And I was like, you know how many things Trump has said that would make him resign out of shame? I was like, what are you talking? He was like, no, Japan's different, dude. If you do something that angers the people to that extent, you have to resign out of shame. He still had 2 years on his term. I was like, I've never heard of that. But that's what he did. That's when you got this new prime minister said she's going to print money and she's not going to let any immigrants come into the country. Not literally, like obviously people can travel, but like, you know, you're not going to have mass immigration coming in. And that's how she got elected. So the thing is, when Japanese people when the Japanese population stops growing at an exponential pace, which it's already been for the past 10 years, and everyone gets old and can't do manual labor, who's going to do the work? Like if you're not going to have other people come into the country. So it's like, that's the broader philosophical question on what's going on with their economy. And in the meantime, they're printing money and raising rates, and that's messing up the yen carry trade, and that's affecting all of us. So robots, okay, you know, that's actually a good, this is what Elon said on the podcast this weekend. He was like, the only way to grow ourselves out of this deficit is AI and robotics. So maybe that's the answer. Maybe that is the answer. But it also depends on, you know, how aggressive robotics is going to be. This is what Elon was saying about the deficit. Oops, you couldn't hear it. Sorry.
Productivity to increase the goods and services faster than the increase in the money supply. So the U.S. is increasing money supply quite substantially with, you know, deficits that are on the order of $2 trillion. Yeah. So you have to have, you know, goods and services output increase more than that in order to not have inflation. So we're not there yet. But if you say like how long would it take us to get there? I think it's 3 years, probably 3 years before. In 3 years or less, my guess is goods and services output will exceed the rate of inflation. Like money, goods.
That is crazy what he just said. And we know Elon with his timelines. But in 3 years, if GDP is outpacing inflation, I mean, like that is why he's on this whole riff about people don't have to work again, because everything's going to collapse to basically zero when it comes to the abundance of goods and services we're going to have. Now, is that realistic? I don't know. But I mean, if that happens, deflation will be the problem, not inflation.
So services growth will exceed money supply growth in about 3 years.
Maybe after those 3 years, you have deflation and then interest rates go to zero, and then the debt is a smaller problem than it is.
Yes.
Right?
That's most likely the case.
I mean, again, dude, I don't know if that's how it's going to play out. I'm pretty skeptical that in 3 years that happens. But if that does happen in 3 years, just imagine, first of all, what's going to happen to Tesla stock, right? Because, part of the reason Elon's saying this is because he thinks that Tesla's going to be a major contributor in outputting all the goods and services. In this case, robots is probably going to be the biggest output to create that deflation. But like the stock market should be much higher than it is today in 3 years if that's how it's going to play out, because a lot of that growth is going to come down to corporate earnings. A lot of that growth is going to be reutilized in buybacks, which are going to keep those stocks afloat. And you don't get that type of GDP growth unless you have margin productivity, as he was talking about earlier, which ultimately benefits shareholders. Now, I don't know what that means for the labor market, and you have the obvious sort of paradoxical bear case where if the labor market collapses, then everything collapses because people don't have money and to buy all these products and goods and services. But Elon's point is like money's not going to matter, which again, I don't fully agree with, but it would be an entirely new paradigm to think of how we evaluate consumption in an economy with that much deflation. But you definitely need the bots to play a role there. Wow, silver, all-time highs again today. My goodness, 58.1 on silver. That's up 3% on the day, officially an all-time high. Gold still at 42.34. Dude, silver is up 95% this year. I mean, who would have thought silver? Gold is still freaking up 70%? No, 60%, 59.8%. A lot of that money is leaving crypto, going to silver and gold. Which is also wild because, young people, I would say, are not easily excited by gold and silver. They're more excited by these crypto products. But as soon as those products stop generating returns, it doesn't matter your age, people stop getting excited real quick. And that's definitely a threat over the next year that people are going to have to look at. Bitcoin still down 84, potentially losing that again. And then Nvidia now losing 180, back down to 178. Ahmed, how are people going to earn a living when robots and AI do everything? I don't know. Now, again, I also don't want to sound super doomeristic and think like everyone's losing their jobs in 5 years. Like, I don't think that's happening. But we can't ignore all the data that we've been seeing about college grads and white collar jobs starting to go away. I don't think AI and robots are going to do everything, but they're going to do a lot. And the question is, does that open up a new job market? But I'm also skeptical of that because like the internet opened up all these opportunities and everyone's like, oh, humans always figure it out. But no one's actually answering what is AI going to create in terms of job opportunities. Like no one's answering that question. Everyone's just like, oh, we always figured it out. We always make new jobs. Like this is how humans, evolve. I'm like, yeah, but the internet, it was quite obvious, even a couple of years after the internet, that it would democratize information, which would inevitably lead to massive, massive business models that could be created on top of that needed those jobs. We never had something that was replacing human intelligence to the point where it's democratizing information, but it's also commoditizing the value of creativity within the information because a large language model, for example, just gives you the answer, or the robot just automates the physical labor. So I think the question then becomes a broader philosophical argument about how does AI enhance jobs. Now, again, Chad's link right there, Palantir has taken a pretty explicit approach to this, as you can see on the link that he has right there, which is, and Karp has been talking about this for a long time, right? The idea that, hey, if you actually believe in AI, then there is a world where AI can be used to help people and can be a motivating force for human labor, motivating force for human agency, and also be something that doesn't necessarily replace you, but enhances your autonomy. I think the pushback to that is what happens when someone loses their job in a factory. Like if you're an Amazon worker, you've been an Amazon worker for the past 5 years, and they come up to you and they say, we don't need you because a robot is going to be doing what you're doing, which we've seen the leaked memos. Amazon's already been discussing how they're going to market their, new age of robotics because they know the PR is going to be disgusting when they fire millions of people. Like what happens to those jobs? What happens to those people? What happens when, there's a lot of robotaxis and you don't need to pick an Uber up, which again, I don't think is going to happen for a while. Like, I don't think self-driving is there yet. But when that is the case, where you call a robotaxi, you don't have to call an Uber driver, what is the job that the Uber driver does? So you have other companies that are working from here's how we empower you, which is how Palantir's talked a lot about AI in the factory, AI in the workplace, AI in the enterprise, AI in the hospital. And then you have other companies that are straight up like, you're going to be replaced. And they're all but explicitly admitting it. And those are, I think, the broader questions that we're going to have to figure out. A robot's going to pay taxes? I do not think the robots are going to pay taxes. I think the companies deploying those robots might get a fat robot tax on them at some point. But I don't know. Like, again, if you've been driving Uber for the past 10 years, if you've been working at an Amazon factory for the past 10, or you've been a UPS driver, like, if that goes away, the question is, how quickly can you develop a new skill? How quickly is there going to be a new job opening if that skill does go away? Or if the skill is just not needed as much? And then what will the emphasis on society be? I mean, like, obviously AI is putting an emphasis on creativity. Even Karp has talked about this, that in their hiring process at Palantir, they're really focused on if you're a creative person, because you can be a good engineer. There's a lot of good engineers. Are you creative enough to be a problem solver? Because in the world of AI, if you can, my cousin, she was working at the house yesterday, and she was showing me, she uses Anthropic. Her company pays for like the highest level of subscription you could pay for Anthropic. She has like a limited amount of tokens every month that she's able to use. And she was showing me the Anthropic, the Claude code, literally digesting the context file that she was giving it to then begin working. And I'm just looking at this thing, and she's like, if we didn't have this, the update that our team is pushing, that we're working on, would take another 3 months. And I was like, are you serious? Or are you bullshitting me? Like, are you, she was like, no, if we did not have this, we would not be able to push this product out for another 3 months. And so I'm like, okay, so there's like legit productivity gains in this sector. And you've got to be very creative when you have a Claude engineer assistant that's helping you, even if it's not replacing you. But what happens when creativity could get commoditized to an extent? And that's what, I mean, for those that didn't see this viral thing over the weekend, I showed this on the market close, but this is what really, I think, is starting to get people a bit more worried. Nano Banana Pro is showing their image generation. And if I showed you this picture and said it was AI, it's not that easy to believe. Now, if I showed you this picture, very easy to believe that's AI. If I showed you this picture, pretty easy to believe it's AI. This last one is really getting people to think, what is an influencer going to look like in the future? Like, if some Instagram girl influencer slides into your DMs, is that really a human? Or is that just someone who's trying to sell you a service, and they're so realistic that you end up talking to the girl because you think she's, I mean, that's already happening to an extent in so many ways, but when it's actually realistic, what does that mean for someone like me that creates content? Like if there's an AI version of the news every day that's almost as realistic, and it's like, it's like maybe it pronounces words correctly, and so people like listening to it. Like, there's just a lot of questions around the creativity element of AI that people are so excited about. Like, oh, AI is going to make people more creative. It's like, well, it's also going to use that creativity and commoditize the concept of being creative in the first place, to an extent, not fully, but I think that's something that could take place as well. It could be the end of influencers. I think there will always be a career for influencers, but it might be it might start to depreciate the value of a human influencer that has tons of different flaws right? Like if you're if you're a company and you're getting an influencer to do an advertising deal with you, and you want the influencer to do X, Y, and Z in their Instagram ad or whatever, like what if they don't have a good ad? What if you can tell this AI influencer who already has hundreds of thousands of followers because everyone thinks they're real, or maybe they know they're fake, but they don't care. They still want to follow them. And they can do the ad perfectly because you can literally prompt the influencer on how to make the perfect ad. I mean, that's a real thing that could, that could take place. Oh no, no more influencers anyway. Yeah, it's just an argument around how the creative element of AI is in question in a variety of different ways. In fact, there was this girl on Twitter. So she works at a company called Sumo. Sumo just raised $200 million, I believe, for $2.45 billion. Some of you in the music world might know about this. They're an AI music platform. They help you make AI music. They raised $250 million. So the girl who's like the head of creators, she put out this sob story of how when she was younger, her parents couldn't afford her music lessons, but she wanted to desperately be a musician. And then she's like, I'm beyond proud to work for a company that is enabling music creation. And don't look at the comments. Don't look at the comments. I did not think this would be the response. 21 million views. I'll put it in the chat if you want to read the comments. Almost 99% of the comments, and I could not believe this, because when I read the post, I didn't think it would be a post that like almost 21 million people hate on. But basically, they were like, we don't want your sob story about being poor in 2006 and your parents couldn't afford music lessons. AI music is the worst thing that humanity has come up with, and you're ruining the art and creativity of music. And I could not believe that was a response. Now I understand that, like, I'm not a musician. I understand if you're a musician, you feel so deeply about this and you think that, music should come from the soul. Music should come from your hard work on learning how to play the piano and the guitar. By the way, I saw Hell's Kitchen over the weekend with my sister and cousin in Broadway. Phenomenal show. Hell's Kitchen. Let me know in the chat if anyone watched it. I mean, the respect I have for people on Broadway that perform twice a day, that can sing and dance at the same time. My goodness, dude. It's Alicia Keys' Broadway show. Just one of the best Broadway shows I've ever seen. But those artists that were on stage, I would bet they're not happy about this AI artistic movement that's happening, because they put in real work and they want to be compensated for their work as an artist. And if everyone can just make an AI song, because everyone can prompt this app that's now worth freaking $2 billion of, hey, I want to sound like Justin Bieber combined with Usher, and I want there to be like a jazz background to the beat, and you can just like use natural language to create music. Like, where's the creativity in it? Now, some people would say that's actually very creative based on the nature of how you're prompting it. Other people would say it is ruthlessly ruining the nature of how people relate to music. And so again, I mean, read the comments underneath. I did not expect her to get roasted as bad as she did, but it was horrible. Look at that. Look, this is her in 2006. She couldn't afford any music lessons. You thought it was a cute story. Everyone in the comments is like, we don't care. You are ruining humanity with your AI music shit. And I think the reason for that also is because people take music very seriously. People take music very seriously. Like, look, I love music, but I'm not like, I don't care that much about it. There's people that are like, they will die for their playlist. And so when you start to threaten that and say that, these artists don't necessarily need to, we don't need Taylor Swift, we can prompt some girl that sounds like Taylor Swift, people get really passionate about that. And I think that could be the issue that's taking place. Chat says, I would say the same thing for social media and attention. Well, I agree. The entire attention economy is built on this idea that you put out content that is unique and original, at least if you want to develop an audience. I mean, how did I build my brand? No one was really talking about Palantir in 2021. I started talking about it. People found it interesting. And then, the story takes off from there. That's how most creators build an audience. At the end of the day, you have to say something or do something that's interesting. People find it consumable, and then you have to use that to continue building momentum. If that entire industry starts to fall apart, or the entire concept of the industry starts to weaken because there is no real creativity, because everything's AI. I mean, we're already seeing this on Twitter. The amount of financial accounts that are just prompting ChatGPT to like explain complex financial topics and then just copy and pasting it on X, like You can easily tell when it's just AI slop. The amount of accounts I saw yesterday tweeting about Japanese bond yields, I was like, okay, like I'm not tweeting about it because I'm trying to study it so that I could like actually write something that doesn't sound like ChatGPT just generated it. Everyone else like, oh, the bond yield's rising. Here's all the reasons it's bad or good. And it's like just a bunch of copy pasted nonsense from GPT. So I think we're already seeing a commodification of attention to some extent. Shout out to Mr. Derek Wall. Look at him being Santa Claus to start off December with the 50 gifted. Rob, you got a membership. George, you got a membership. Lean, you got a membership. Tom Baker, you got a membership. SV, you got a membership. Kamish, you got a membership. Thank you, Mr. Derek, for the 50 memberships. Again, I did have a great dinner with Derek and Triple V. And it was fun. It was fun. I showed them the steak we ate. Derek's used to this type of steak, but I'm not. And yeah, your boy legit ate it. So there you go. But no, it was fun. It was great connecting with Derek, great connecting with Triple V, and it was a good time. It was a really good time. It was also a good steak. Like I really have never ate steak like that. So I was happy I just went through and ate it. It's time to freaking eat it. Is BMNR still down? BMNR is still down. By the way, speaking of crypto cycles, when Derek was on the show back in August, I mean, did he not say, hey, Derek's been OG Bitcoin literally since 2010. So he understands these crypto cycles. Now, I don't know if he fully believes in the nature of the cycles, but he definitely did say the cycle top is coming up. And that was in August. Quite literally 2 months later, we had our at least short-term top. And now the question is if that is the actual top for the next 360 days. The other stat I've heard, and this is Derek said this as well, is you buy 500 days before the halving, you sell 500 days after the halving. And I believe we are 500 days after the halving at this point. I think we got there around that September, October timeframe. So, that could be another cyclical coincidence that people have to analyze. Opendoor right there is down 6%. GameStop's up 1.3%. AMD's up a little bit. And then Robinhood still down 5%. Bro, you're Indian. You can't have any beef. As long as you guys don't tell my grandma that I ate that steak, I'll be okay. Now, if you show her that picture and said your grandson ate it, she's probably going to have a word with me. But as long as she doesn't know, we should be okay. Nick said, we saw Hell's Kitchen. If you love musicals, go see MJ. You'll love it as well. Yeah, I want to see the Michael Jackson one. I haven't seen that one yet. But I just so much respect for the people on Broadway, dude. Like, unbelievable the amount of work. They do it twice a day, and they're singing and dancing, and like the singing is like really good singing too. It's just, I thought it was incredible. Last Broadway show I watched was Lion King a year ago. Aladdin a couple years before that, so I haven't seen it in a while. But I think it was good to kind of catch up on the fun of Broadway. We have an update on tariffs right here. Let me pull this up real quick. This is with the UK. Let's pull this up right here.
Trade deal on drug pricing. Now, there are two parts to this deal as laid out in statements by the U.S. and UK governments just over the past 20 minutes or so. The first part is that the National Health Service in the UK will pay more for pharmaceuticals. That's been a bone of contention on the U.S. side for years, that the UK government is not paying high enough prices for American pharmaceuticals. That, according to both governments, is going to change, and they'll do that in exchange for an agreement that import taxes on pharmaceuticals from the UK to the U.S. Be set at 0 for the next 3 years. So that's the overall structure of the deal. We're also seeing a statement here from Bristol Myers CEO saying that he anticipates being able to invest upwards of $500 million over the next 5 years as a result of the deal. In the UK version of this release, he says that this agreement is a sign of progress and one that creates an environment conducive to our continued presence in the UK. So obviously a big corporate piece to this announcement as well, guys. Back over to you.
I mean, it's a big deal, Eamon, and also a big deal for Europe, which doesn't have this kind of sweetheart deal. And they ship a lot of drugs from places like Ireland as well. They have the higher tariffs.
Yeah, and you wonder if this puts pressure on other European countries to now come to the table and get a similar deal, or maybe now at this point, not quite as good of a deal as the UK is getting here.
All right. Eamon, thank you.
All right. Seems like that's the big tariff news of the morning. UK pharma imports will continue to be at zero as the tariff debacle around pharmaceuticals continues to, I guess, be in question. We got some updates last week with Lilly and Novo, but Trump has said he wants to tariff pharmaceuticals so that we start manufacturing in the United States. It's tough to do that, when people really need their drugs. So I think keeping them at zero for the UK does make a lot of sense. Nvidia right there, 178.88. That's up 1.0%. Amcor having a better day, up 2%. And the S&P, not that far off from reclaiming the high that we had on Wednesday. All right, folks, I think that's it for me today. We'll be back on the close. We'll see what we've got going on. We don't have any other earnings. Honestly, this week, we don't have too much. Yeah, no earnings today. Honestly, no earnings for the rest of the week. Actually, we do have earnings tomorrow. We have Marvell, CrowdStrike, and Okta tomorrow. And we had MongoDB this morning. How did they do? I didn't even look at Mongo. And then we'll do word of the day. Mongo, that's flat. Oh, Micron? Is Micron? No, Micron was a while ago. Oh, we have Salesforce and Snowflake on Wednesday. We still have some earnings. We have Macy's as well. All right, so we have some earnings this week, but nothing today after the bell. We did a MongoDB. MongoDB is after the bell. Sorry. I thought it was in the morning. It's after the bell. Okay, so MongoDB and Credo. MDB and CRDO after the bell. All right, so we'll take a look at those earnings later today as well. Did your sister turn Triple V into a socialist? No, but they did have a conversation about taxes. And look, my sister held her ground. She did not deflect from her stance, but Triple V was not able to convince her. So no, she was just like, I think billionaires should contribute more to society. And then they got into a conversation about, well, who creates the jobs for society, yada, yada. So it kind of went back and forth as a typical debate does. But she held her ground and made her case. No, it was good. It was overall, it was a fun time. Steve was there. We had some other family members on Vlad's side. It was just like, it was a great time. It was almost like 15 of us. And it was just really cool to connect and meet with everyone once again. All right, word of the day. So we prompted GPT. Derek says we beat her down. Look, but she held her own. She did it. She didn't like, I kind of thought she would be like, oh yeah, you're right. She was like, nope. She was like, the name is Mamdani, So she was holding on to her beliefs right here. Word of the day, convexity. So we prompted GPT to give us finance words of the day so we can learn a little bit more on utilizing some of these words. Convexity, I've definitely heard this word before. A measure of how the price of a bond changes as interest rates change, capturing the curvature of that relationship. Most people know duration basic, but convexity is the next level. It explains why some bonds accelerate in price when rates move and why others lag. It's a big deal for mortgage-backed securities, hedging, and options on bonds. I think Jason has used this word a lot as well, not only to refer to bond prices, but also to just general price divergence when it comes to technical analysis. So that's definitely a word that we have heard many times before. Convexity, a measure of how the price of a bond changes as interest rates change, capturing the curvature of that relationship. Again, the Japanese bond yield's the highest since 2008. I think that's what sold Bitcoin off last night, early into this morning. And then the 10-year, still above 4. It was below 4 on Wednesday. Now spiking up a little bit as well. All right, cool. That is it for me. Thank you, everybody, for being here. Derek, thank you for the 50 gifted again. Appreciate you being here. We'll be back on the close. We got some earnings. Then we'll keep going from there. And we'll see how we start off the month of December. Maybe S&P reclaims some of that green. We are awfully close. And we can end up having a green day for the first day of December on the S&P. Bitcoin moving a little bit right here from 83.5 to 85. So you got a bit of a red candle with Bitcoin at 85,100. All right. Thank you, everybody. Appreciate it. We'll see you all on the market close. Bye, everybody. Have a good one.